A very good morning and a warm welcome to the esteemed speakers, distinguished dignitaries, experienced professionals from India and abroad, members of the National Insurance Academy alumni community, members of the media fraternity, my colleagues and dear students of NI's postgraduate management program. I, Ruchika Yadav, Research Associate at National Insurance Academy, and Dr. Shalini Tiwari, my faculty colleague, are delighted to welcome you all to the 23rd Annual C.D. Deshmukh Seminar. We also wish you a very happy and prosperous New Year 2022. May this year be full of health, peace, and prosperity for you and your loved ones. The annual C.D. Deshmukh Seminar is NIA's flagship event organized under the sponsorship of the Life Insurance Corporation of India and dedicated to the memory of Sir C.D. Deshmukh, India's key architect of the insurance business. And we feel honored to have you all participating in the event today.
Ladies and gentlemen, I'm Shalini. Very good morning to all of you. A wise man once said, all knowledge that the world has ever received comes from the mind. The infinite library of the universe is in our mind. The external world is simply the suggestion. Well, these are the words of one of India's most inspiring philosophers and spiritual gurus, born on this date in 1863, Swami Vivekananda. Following the teachings of Swamiji, we have invited some of the brightest minds to discuss the theme of the seminar, Reimagining the Life Insurance Business Models in the Next Decade, and assist us in understanding ways to unlock new opportunities for innovation, partnership, enhancing social well-being, and growth of all the stakeholders.
Without further ado, we shall begin the inaugural session. But before I request Director, National Insurance Academy, Mr. G. Srinivasan, to present the welcome address, let me give a brief introduction. Mr. Srinivasan assumed charge as Director of National Insurance Academy in year 2018. After having a distinguished career in the general insurance industry, both in India and overseas, spanning 39 years, he has served in the boards of various reputed organizations and also holds the distinction of being the longest serving CMD among all the public sector general insurance firms. A recipient of the Personality of the Year Award by Asia Insurance Industry Award Singapore, Mr. Srinivasan has also led the New India Assurance Company's Trinidad and Tobago subsidiary at Port of Spain as Managing Director. With this brief introduction, I request him to kindly present the welcome address.
Thank you, Ruchika, for the introduction. Good morning to every one of you. Let me also join others in wishing everyone here a very, very happy and prosperous New Year. Mr. M.R. Kumar, Chairman, Life Insurance Corporation of India. Mr. Ganesh, Member, Life of IRDAI. Eminent speakers in various panels. Distinguished participants, students, my colleagues from National Insurance Academy and media. Let me extend a very hearty welcome to every one of you to this 23rd annual Sir C.D. Deshmukh Memorial Seminar on the theme Reimagining Life Insurance Business Models in the Next Decade. My special welcome to Mr. Kumar, who despite his very pressing commitments could find time to attend this and deliver his keynote address. We know how busy he is in the wake of the ensuing IPO of LIC. I thank him for being here. I also extend a very hearty welcome to Mr. Ganesh, Member Life IRDAI, who despite his busy commitments is here to deliver a very special address to all of us. I also welcome all other participants to this seminar. I also wish to place on record my thanks to LIC for sponsoring this event. C.D. Deshmukh Seminar is an annual event organized by National Insurance Academy in memory of the legendary personality Sir C.D. Deshmukh, who was the Finance Minister of India after independence, and was also the first person to be appointed as the governor of Reserve Bank of India. He had many accomplishments to his credit during his public life. He was responsible for formation of the State Bank of India, which continues to be the largest bank in India of global size. He was also, instrumental. His biggest achievement, if I may say, was formation of Life Insurance Corporation of India by integrating almost 245 companies, a mammoth task by any standard. His vision of creating LIC has been achieved over the years, with LIC contributing in a big way to taking insurance to the people and also contributing to economic development of our country in a very, very big way. Today, I am very proud to say that LIC is a matter of pride for every Indian and has been a symbol of trust, confidence, and service to the people. I think even today, the terms insurance and LIC is synonymous in our country. The seminar is being held at a very appropriate time as LIC is getting ready to launch the biggest IPO of our country. I think on this occasion, let's pay our homage to Sir C.D. Deshmukh, whose vision has really contributed to this kind of a growth and stature of Life Insurance Corporation of India today at this point of time. Friends, a few words about National Insurance Academy. National Insurance Academy is an institution of eminence in the field of insurance education, learning and research. We're doing our best to provide insurance talent to the ever-growing insurance sector. Every year we train about 8,000 insurance professionals, both from India and abroad, in various facets of insurance, technology, risk management, governance, and various other fields. We also provide, young talent to the insurance sector through our PGDM program. I'm very glad to say that we continue a track record of 100% placement this year also, with attractive compensation levels. NA alumni are really occupying key positions in the insurance sector and technology sector, not only in India but also in various parts of the world, and really bringing laurels to our country and also to the academy. We are also actively involved in many research projects which bring value to the financial services sector of our country. Friends, the theme of the seminar, Reimagining Life Insurance Business Models in the Next Decade, I think is very, very apt and relevant. The last 2 years has been a period of great challenge to humanity, with the pandemic repeatedly, attacking us, harming us. As we speak, India is in the midst of a third wave of COVID-19. The way people look at insurance as a concept and the way insurance business is being done is undergoing tremendous changes. The loss of lives due to the pandemic and also the economic and social strain it has created has brought home the urgency to make India a fully and adequately insured society. While large number of people are still out of the insurance net, what is perhaps probably missed out is many people are, even those who are insured, are not adequately insured. There's therefore a compelling need for all the stakeholders of the insurance sector to really, act very fast, come out with a plan and implement that, so that life insurance reaches everyone and everyone is able to take a proper policy, so that if something happens, his family is adequately and reasonably protected. This would require taking care of the aspirations of the new customers. We need interesting and simple products. Today, the customers want ease of access, speed, and also certainty. I think customers want solutions, not merely standard insurance products. And they also want to co-create insurance solutions. So the industry will have to focus on living up to the aspirations of the new customers, especially the younger ones, because today we see emergence of these new customers who have the ability and also confidence to take economic decisions, including insurance decisions. Technology is yet another area. Technology is playing a big role in every aspect of our life. The ecosystem is also extremely conducive to use of technology at this point of time, with India focusing a lot on technology. The industry will have to look at how they can leverage technology to increase reach and also deliver service fast. Cognitive intelligence and blockchain technologies today are reshaping the insurance sector across the world in terms of better underwriting, claims management, and also greater customer connect and service. The Indian life insurance industry, all of us know, have grown tremendously over the last decade, but still there's a lot to be done. There's miles to go before we can say that we have achieved everything. The business models are undergoing tremendous changes to keep pace with what's happening in the society, both globally as well as in India. I'm sure the deliberations today on the new business models for the life insurance sector in the coming decade would throw a lot of interesting ideas to the policymakers so that the insurance sector leaps forward towards its objective of providing insurance solutions to the people. Once again, I take pleasure in welcoming everyone. Thank you very much.
Thank you, sir. Ladies and gentlemen, I now have pleasure introducing the accomplished guest for the inaugural function, Mr. K. Ganesh. Mr. K. Ganesh assumed charge as member life in Insurance Regulatory and Development Authority of India on 31st July 2019. Prior to joining the IRDAI, Sir was Executive Director for Corporate Communications at LIC of India. Sir joined LIC in 1983 and has held various positions around the country, including Senior Divisional Manager at Indore, Chennai DO2, Regional Manager Marketing, and Zonal Manager at Hyderabad. Sir has also served as the Chief of Health Insurance and Executive Director of Life Insurance of India for Customer Relationship Management. Reading books and listening to classical music are two of his favorite pastimes. With this brief introduction, I request Sir to kindly present the special address.
Good morning, and Dr. Shalini, thank you very much for your kind words. Mr. Srinivasan, Mr. Kumar, and all my friends joining today in this most eagerly awaited program of the year. As I was just listening to Mr. Srinivasan, I was thinking that probably this is the equivalent of the Bretton Woods dialogues in insurance. And we are really keen to listen to the ideas that will be coming today through the experts in various fields. And it's a pleasure joining all of you today from the IRDAI Hyderabad. I convey my greetings to all our colleagues in the insurance community and to all the students in the NIA. This is a time when I think very aptly the NIA has titled this day's program as Reimagining Life Insurance Business Models in the Next Decade. It could not have been more aptly presented than this, because as we are all aware, we know what insurance is and how it has been marketed and how it has been taken care of the country, apart from the policy holders. But the last 2 years in particular have really tested all of us, tested us as a customer, tested us as an insurer, and tested us for the people who are associated with this industry. And so, taking stock of what we have learned, particularly during this pandemic, and what do we see as the way forward over the next at least a decade, I think it's a very apt one, and I'm once again delighted to join this program today. I thank Mr. Srinivasan and the NIA Life Insurance Corporation for giving me an opportunity to join you all on this day. The context definitely is about the immediacy of the pandemic and the need to adapt the life insurance business models in the new normal and look beyond. Obviously, it is important that the regulatory aspects of it also keep pace with the needs of the industry and the people who are looking to insurance, and contribute to the development of this industry with one important benchmark, which is that at least by the course of the decade, if not at the end of it, we will be surpassing the world average of life insurance penetration. The message from the pandemic to the life insurance industry is, here is a challenge and an opportunity. On the one hand, the pandemic has very strongly reinforced the core value of insurance among the public at large. Until recently, whenever there used to be a dialogue about taking out an insurance policy, the customers would somewhere in the back of their mind equate it to an investment and then wonder whether the returns of investments are on par to what they might get if they went and invested their monies elsewhere. But this pandemic has really brought home to all the people of what insurance is and why insurance is very, very necessary. It has also subjected the industry to a severe test of resilience. These 2 years has been a time of learning, unlearning, relearning, and it's been a continuous process of learning on a day-to-day basis. Sadly, the test is not over yet because, as we are all aware, the pandemic is just not leaving us. Different varieties of these viruses are coming in, and these are going to impact the people in the large numbers. That is what is the fear. And in their moment of stress, I think how the industry will respond is going to be a matter of great importance. The product offerings, as I look at it, are moving away from savings oriented to protection oriented, protection for life, protection for health, and so on. So I think this is a welcome and an important change that is happening, where the importance of insurance is now being understood, and it's easier now to convince people of the need for individual insurance for self and family and businesses. Emerging fintech is also causing a lot of improvements in the environment. They will hopefully redefine distribution and customer services, and we may have to now redefine and reimagine customer engagement to also move towards risk prevention and risk quality improvement. Now, the options before us are play safe, increase premium rates, tighten underwriting, restrict claims, or challenge ourselves to seize the opportunity and act with a long-term vision. What are the questions that will be before us? When do we do it? So my answer to that is, if we in the insurance industry don't act, who else will? And if not now, when? And I believe all of you will overwhelmingly vote for accepting the challenge. This seminar today, Reimagining Life Insurance, holds the clue to what do we want the industry to be in the next decade, how do we get there, and I'm sure in the discussion that will follow, there will be a lot of ideas that will help us go on this path. But before we get into that, a quick response, what did we do? A quick recap of our response, particularly for our students community who may be aware of what has happened, but I would like to tell you all that when the pandemic broke out 2 years back, these were requiring immediate responses by the regulator and by the industry. Those were designed, the responses were designed to ease the burden on policyholders and ensure that the industry remains resilient. The interventions designed by the regulator to ease the burden on the policyholders were: one, to assure the policyholders of coverage for COVID under the existing contracts, to ensure that people are able to keep their contracts live because of the disruption in the early phase of the pandemic, where offices were shut down, transportation was not available, there was a difficulty to pay their premium. The regulator came up with the grace period extensions. It also ensured continuous services without disruptions. Expeditious claim settlements was also the focus, and all these measures were aimed at facilitating the ease of doing business. The interventions designed to ensure the industry remains resilient. There was a review and revision of business continuity plans on a regular basis. There was a close monitoring of solvency and financial resilience by the insurance entities. There was easing of compliance requirements, and there was also more and frequent interactions with the industry, leading to responsive regulations. What were the outcomes of these initiatives of the regulator? I would say that it is the court of public opinion that should finally tell us whether what we have done both as a regulator and partnering with the industry, how good we were. But I would want to believe that we have successfully faced the first and second waves. The total premium income in 2020-2021 grew nearly 10% over the previous year, indicating overall robustness in new business performance as well as renewals. Claim settlement in these times were very, very important, and I'm very happy to inform that the ratios of claim settlement moved up to 98% compared to 96% in the previous year. And really something which I am very happy to inform you is that the life insurance penetration ratio increased from 2.8 for FY 2020 to 3.2 for FY 2021, and this is by far the highest penetration rate after the peak of the ULIPs in the 2010-11, and it is closer to the world average of 3.35. So yes, there was a crisis, there was an opportunity, and I think the industry has really done very well to ensure that the life insurance penetration ratio has increased from 2.8 to 3.2. The momentum in this year, friends, is also continuing. As of December 21, the life insurance industry has registered a growth of over 7% in new business premium income, 8% in the number of policies, 32% in the number of lives covered in group schemes. These compare favorably with negative or near zero growth in life insurance premium in European countries such as UK, Italy and Germany, or around 4% increase in US in applications for life insurance policies. We will not rest on our laurels of last year, and I'm sure that the industry would further strengthen their processes and ensure that the life insurance penetration will further improve during this year. Now, preparing for the next decade, we have so far seen multiple variants of the pandemic, and unfortunately, it seems the end is still some time away. There is also the talk of long COVID. Every other day, we get to understand from the medical fraternity that different types of health issues are coming up for people who have been impacted by COVID. Now, the heightened awareness of the need for insurance also means that there will be strong buoyancy in sales even as the pandemic continues, but certainly once the pandemic waves and new normal sets in. Are we prepared to take advantage of these opportunities? A decade from now, what would separate the winners from the others? Before we set out to formulate our response, let us remember the impact of the pandemic has been different in different countries. In India particularly, with our vast population and also our understanding that our healthcare system in some parts of the countries are not sufficient, there was a prediction at the early days of pandemic that we could be impacted very, very severely, and that was the fear amongst all of us. But the outcomes have been significantly different. We seem to have been better managed than some of the advanced countries, and certainly better than many of the early predictions. The difference is more striking when we look at case fatality rates, with those in India being much lower than in some of the advanced countries. Considering this, the response of our insurance industry to the pandemic may have to be different from that in some of the advanced countries. This will become particularly significant when we interact with the reinsurers, and this is something which I have reasons to hope with optimism that we will be able to manage it well without being very stringent while underwriting new proposals. Some of the areas already Mr. Srinivasan in his welcome address has already mentioned will be a revamp of the customer's total experience, faster and contactless customer onboarding processes, design products that meet specific needs rather than omnibus bundles, products that customers can instantly understand and relate to without the need for elaborate explanation. In the environment of low interest rates, for products to be successful, they have to focus on the core value of insurance, mitigating mortality and longevity risks. Simple and transparent product documentation will be necessary. Redesigned underwriting processes will have to happen, and significantly increased customer touch points across the entire length of the customer's journey with the insurer, not merely limited to the onboarding process or the periodic reminders of the premium that he has to pay. The authority, the IRDAI, has relaxed the KYC norms, with agents no longer required to do physical in-person verification of their customers. These have been provided to the insurers with the hope that this will ensure that onboarding process of the customers will be simple and will be easy for both the customer and for the distributor. The key role of technology in product design, distribution and operations is going to be important. Physical offices will make way for virtual offices. Technology will play a big role in bringing people and teams much closer virtually. Breaking down the barriers of geography, time and cost, workflows have to be redesigned to exploit the synergies never thought possible. But importantly, we must ensure that the newer digital tools are inclusive and do not create more digital divide. Distribution is going to be a very important facet in these times. The distribution and operational efficiency with vigilance is going to be very, very crucial. The rest of the financial sector, as we see them today, are moving towards disintermediation and direct purchase models for some time. These newer models are disrupting traditional approaches to businesses. The value in estimating intermediation costs is proving to be very compelling, particularly to the millennials. Insurance industry cannot remain uninfluenced by this for long. However, given the unique nature of life insurance, we may have to look at the hybrid, the phygital models for distribution. With increased use of digital technology, the need for deploying robust data protection and cyber security measures assumes significant importance. Importantly, core competence and capacity building among our people. Risk retention capacity could be the differentiator. Improved risk assessment, underwriting processes, record maintenance, All these are going to be crucial going forward. And focus on fraud prevention and fraud detection are going to be on an ongoing basis very, very crucial. Are we waiting for the claim intimation to verify the bona fide of the proposer, or are we going to adopt a more proactive approach? How early and for how long? These are going to be very, very important. Building better product portfolio, booking the businesses faster, ensuring embedded value keeps improving, the investments make, all these are going to be very, very crucial. And in this context, the three topics for panel discussions today: understanding the changing expectations of the customers, regulatory interventions and designing appropriate products, and leveraging digital technology to meet them, I think are extremely apt. I'm sure there will be several pertinent questions with respect to each of the topics for panel discussion. How are you measuring the changes in customer preferences? Have the insurers built systems that would continually collect such data, validate it and convert it into actionable information? What have been the key outcomes so far? The Prime Minister's Jeevan Jyoti Bima Yojana and the standard product experience tell us that simple products have a higher uptake. How do we plan to take this forward? One expectation from digital technology is that it would help us to reach those who have not been reached by traditional channels so far. Another expectation is that it would help us reduce costs and improve operational efficiencies. But is this happening really? Or has the experience so far been to the contrary? If so, what needs to be done about it? How are life insurers planning to leverage the increase in FDI limits? What further regulatory dispensations the industry is seeking from the regulator? These questions will go on. And I am very confident that the panel discussions will throw light on all of these during the day. I conclude my interaction by thanking NIA and all of you for this participation. Thank you very much.
Thank you.
Thank you very much, sir, for a thought-provoking address. Going forward, ladies and gentlemen, for the keynote address, I feel honored in introducing the highly eminent speaker, Mr. M.R. Kumar. On the 14th of March 2019, Mr. Kumar took over as chairperson of the Life Insurance Corporation of India. Having joined the LIC as a direct recruit officer in year 1983, he has had the distinct honor of leading three of LIC's most renowned zones during his 3.5-decade career. As an executive director, Mr. Kumar oversaw the corporation's personnel department as well as the pension and group insurance verticals. Several initiatives were launched during his time for the benefit of the employees and the reputable firm. He also serves on the boards of directors of LIC of India's domestic and overseas subsidiaries and views people to be the organization's most valuable asset. With this brief introduction, I request him to kindly come forward and present the keynote address.
Thank you, Ruchika, and thanks for the introduction. Good morning to all of you, and Director NIA, Mr. Srinivasan, Member Life IRDI, Mr. Ganesh, speakers and participants, members of the insurance fraternity, and esteemed audience. At the outset, let me wish all of you a very, very happy new year. I know that we're going through troubled times, couple of years now, and I remember that a couple of years back we had a physical meeting of the CD Deshmukh seminar, and then we now really got used to the formats that we have. But then I think the year is going to be good. Let's believe that, and therefore a wonderful year to all of you. Gives me a lot of pleasure to join Mr. Srinivasan, Mr. Ganesh, and all of you in inaugurating the 23rd CD Deshmukh seminar held under the aegis of NIA and LIC. Over the years, the seminar has become a very important chapter for the insurance fraternity in India to come together and deliberate on ideas that have the power to transform the industry in the right direction. And this is an annual event for which I think a lot of people look forward to. They participate because of some key takeaways that one can draw from here. In today's time, as the industry moves ahead with the power of transformative change, our purpose would become more and more pertinent. As Mr. Ganesh rightly pointed out, that we continue to provide our citizens with the essential moat of life insurance security and close the protection gaps in a very holistic manner. The challenges are far from over, as both Mr. Srinivas and Mr. Ganesh said. We are still in a post-pandemic world and the pandemic is refusing to go away. But having said that, I think we have a lot of several positives waiting for us that provide a beacon of hope for the industry to move ahead. In this context, I had jotted down some points that I thought I'll share with you. The Indian population, which was at one point of time 1.2 billion, and has now going to reach, they say, 1.5 billion by 2031. The number of households, which used to be 245 million, is expected to reach 376 million over the same period. All of you know that we have one of the largest young populations in the world. And the millennial cohort of the young population in itself is a mega trend of the current times. And the life insurance industry must surely look at this as an opportunity of the decade. These youngsters are tech savvy. They are a bigger part of the marketing strategies of all kinds of product segments today. And research tells us that they take their own financial decisions and possibly are the most informed and valued generation of today's time. Urbanization has also been India's most important economic growth drivers. Our population on the urban area has also been rising consistently. With this, the incomes are also expected to increase, which will lead to higher consumption of going forward. Now, these changes are causing multi-dimensional impact on our industry. Several critical trends, many of them were listed by Mr. Ganesh, are at play here. And they are ushering in an era of change for life insurance especially, also for non-life over the next decade, including high digital adoption by customers. And this, as all of you know, has accelerated post-COVID, and where customers are expecting frictionless journeys with increased preference for a hybrid, the phygital, one may call it, against the purely physical interactions. Secondly, large digital platforms are keen to monetize their customer base and see the opportunity to embed insurance into their platforms. And this poses a challenge for insurers as they run the risk of losing the customer ownership for a large set of customers, especially the millennials, to these platforms. Thirdly, profitability requirements coupled with the need to deliver a superior experience to their customers and channel require insurers to reimagine their journeys and processes. And insurtechs are developing a large range of innovative solutions cutting across the value chain from underwriting, fraud management to distribution. Therefore, these offer the opportunity for partnerships. So therefore, ladies and gentlemen, these trends raise crucial imperatives for life insurers. Traditional channels need to evolve to serve younger and more digitally savvy customers. In addition, insurers need to build newer distribution models. Also, insurers need to explore partnerships with large digital platforms, creating win-win models. We also need to invest in new age digital talent to support any digital transformation effort. Hence, to win in the next decade, and the context in which we are speaking today is the reimagining part of it. The life insurers will have to really reimagine the business models on several dimensions. Let's take a few. LIC in particularly, and many other insurance companies also, have been successful with the agency model. Agents will continue to be the critical change given the role they play as advisors. However, this model needs to be reimagined to operate in a world that is being significantly influenced by digital. So therefore, it is my thought process that life insurers need to work out how to deploy a sales force of bionic agents equipped with the next generation digital tools and analytics. So they need to combine the best human qualities of advice and engagement with the rigor and intelligence enabled through technology and analytics. And this needs to be seamlessly embedded in the channel, covering the entire value chain from recruitment to training to agency management to customer engagement, policy sales and servicing and so on. This will help life insurers enhance sales force productivity and deliver a superior experience for their agents and customers. Next is the digital sales channels itself. With rapid increase in the adoption by customers in all kinds of platforms, direct to customer digital sales for certain simpler products like term life is going to see strong growth. And life insurers therefore need to build core digital sales capabilities, including digital marketing, seamless sales journeys on their website, coupled with call center capabilities that digitally assist customers. Globally, life insurers are increasingly partnering with large digital platforms like e-commerce to target customers for life insurance. This trend is still a very nascent in our country. However, we'll see this model becoming more prominent in the next decade as digital platforms look to monetize their large customer base and life insurers want to expand their customer base, targeting the segments that are more comfortable operating the digital space through these platforms. Distribution of the future is also going to see the emergence of omni-channel models, with customer expressing their interest through online channels, thereby creating a lead on an insurer's website or a digital platform, but preferring to discuss it face-to-face with an agent before they finalize the purchase of a life insurance policy, which is typically more complex than other financial service products. So therefore, the future is going to see the convergence of the digital and physical worlds. Frontline professionals will continue to play a critical role in reaching out to customers. Therefore, insurers must embrace the integration, as I said before, and directing leads to the channel or agent that best serves each customer's needs. Therefore, it would be very customer specific. Further, agents would be armed with the advanced analytics on their customer base as well as centrally provided digital leads. Throughout the customer lifecycle, insurance companies will engage in multi-channel, personalized customer interactions to promote cross-selling, and therefore upgrading agents' capabilities to more effectively use of digital tools will be critical to the distribution shift. Looking at the customer's journey, I think the need of the hour is to reimagine processes with a customer-centric approach, using technologies that reduce friction for customers, especially medical, underwriting, servicing, saving their time, creating more predictability and transparency. The evolution towards continuous underwriting, made possible by increased data and device connectivity, will present further opportunity for personalization. Currently, mortality underwriting is suffering from two primary data gaps. First, it's constrained to a single moment in time, the initial sale. The only data available at that point are past morbidity and behavioral data on the customer. Second, it fails to account for a customer's lifestyle changes, which are significantly more controllable. Therefore, it is expected that underwriting is going to evolve in phases that will increase personalization and customer engagement. Currently, insurers focus on automating the underwriting process to improve efficiency gains, and some insurers have advanced to accelerated underwriting, for which applications are submitted digitally. Doing so dramatically reduces the need for invasive, fluid and paramedical exams and results in near auto insurance of the majority of policies. Therefore, insurers can then graduate to micro segmentation and personalization, for which individualized offers will be generated using comprehensive internal and external data sets with enhanced accuracy. Winning companies will provide continuous one-touch underwriting with dynamic adjustment based on customer behavior and suggested personalized actions to significantly drive healthier behavior. Developing products is also going to be very crucial. Solutions suitable for a challenging regulatory and interest rate environment. I think Mr. Ganesh has also covered some of that. But interest rates have been globally depressed for a decade and even longer for some economies, such as Germany and Japan. And this has increased further due to COVID-19, with very few signs of abating. Therefore, changing regulations have limited traditional methods of doing business. The most successful life insurers will redouble their focus on innovation and flexibility. Customers will also continue to seek out guaranteed returns in the future. So when you look at interest rate and we look at the customer's preference, somewhere there is a gap which needs to be bridged. It means many insurers will face challenges in offering guarantees in a capital efficient and profitable manner. Collectively, traditional long-term fixed rate guaranteed products will undergo a paradigm shift in structure from being rooted in guaranteed returns to offering upside potential with guaranteed downside protection. Value-added services, I don't have to say this, it's something that is happening all over, whether it is insurance or any other kind of product. And innovation is going to likely expand to all other kind of services. Life insurance companies will increasingly seek and will have to differentiate themselves through value-added services and non-monetary benefits, particularly in life and health coverage is going to continue to converge. Such services will give insurers access to fee-based earnings, an alternative revenue stream that could be rewarded by investors. At the same time, fee-based earnings introduce more complexity vis-a-vis sales and after-sales support. Finally, of course, one needs to talk about, when you talk about reimagining, we need to also reinvent skills and capabilities of the people. We need to transform in order to compete and win. Therefore, the insurance workforce of the future will also need skills the industry hasn't traditionally focused on, such as data scientists, customer experience experts, AI, and so on. And to build this type of workforce, insurers will have to rethink the way they plan, recruit, train, and develop people. We today operate through departmental silos that lead to a pace of decision making that is not suited for a world which requires agility and cross-discipline collaboration. Insurers will have to explore new ways of working that are cross-functional, collaborative, with very short, rapid cycles of delivery. The path to grow in the next decade will require new talent and bolder strategies and a radically different workforce underpinned by skills of the future. Knowledge value, technology, partnerships, in short, is what is going to take us forward in the next decade. In spite of COVID-19 challenges, as Mr. Ganesh rightly pointed out, insurance industry is poised for a robust growth and acquiring new customers and retaining existing customers. The decade is full of promises and bright opportunities. Increased literacy, financial awareness, rapid urbanization, rising customer aspiration and increasing digitization, coupled with the government support in the form of reforms and policies, is expected to support growth for the industry. The Indian life insurance industry, ladies and gentlemen, stands on the threshold of transformation. The market is growing. The future holds great promises. It's a vast market which cannot be expected to saturate very fast. The life insurers, regulator, and all those involved with insurance industry, whether directly or indirectly, can hope to look forward to a healthy and vibrant next decade. Let's come together to collaborate and create the best solutions for customer at optimum cost and value for all stakeholders. My best wishes to all the panel members who would be deliberating on the different strategies of the panel discussion scheduled today. I thank Mr. G. Srinivasan, Director NIA, and his team, and wish the virtual seminar a great success. Thank you very much.
Thank you, sir.
Thank you very much, sir, for such an insightful address. Ladies and gentlemen, as we come to the end of the inaugural ceremony, I request our Chair Professor, Life Insurance, Mr. P. Venugopal, to express our gratitude to the distinguished speakers of the inaugural session. Venugopal, sir.
Thank you, Shalini. Good morning, everyone. Good morning, Mr. Ganesh, the member IRDA on the life side, Mr. Kumar, Chairperson, LIC of India, and the Chairman of the NIA Governing Board, and also the various participants to the pre-panel discussions today, and also the delegates, the press, for having come here. This prestigious 23rd edition of the C.D. Deshmukh seminar, which is sponsored by LIC of India. This inaugural ceremony has been very eagerly awaited of the seminar. Mr. Ganesh, the member life of IRDA, has very eloquently stated about the challenges and opportunities which is to be faced by the insurance industry in India in the next decade. He also, besides the life insurance industry, he also mentioned about the challenges faced by the health insurance industry also, especially driven by the COVID pandemic. The last 2 decades, last 2 years, we have seen that the pandemic has disrupted the entire world, and the economies has been affected. There's a lot of casualties on the life side, and especially on the health of the people. So he also mentioned about the directions given by the IRDA during the pandemic, the product ease of doing business, and the way forward the next decade. He also said that the industry has to take care of the opportunities available and also to bring in good, easy to sell products. We thank Mr. Ganesh, member IRDA, for having taken his time off and being with us and to convey his message to the industry. Let me also thank Mr. Kumar, Mr. M.R. Kumar, Chairperson LIC of India and Chairman NIA Governing Board, for having taken his time off. Right from the time we started discussing this the seminar, he had expressed his feelings that if all goes well, he'll be there on this seminar, because in fact we wanted to have this seminar physically in this campus with the easing of the pandemic. But then because he was had a lot of constraint about coming all the way to Pune because of the pressures of the ongoing IPO of LIC, still I believe a lot is to be done by LIC. So I think that some as a blessing in disguise, this the virtual meet, and because of the government instructions, the latest guidelines to have all close down all activities and have mostly virtual meetings. Mr. Kumar, in his usual style, covered a wide gamut of topics, right from what the industry expects and what the insurance companies should do in the next decade by able to adopt the digital technology hybrid model, and also have agents, the distribution channel who will be able to adapt to the latest challenges. But of course, life insurance being an intangible product and being a product which has to be sold only by personal interaction, agents will have to adopt to the changing method of selling life insurance business. Thank you, sir. Thank you for the wonderful speech in his own inimitable style. We look forward to more such discussions on this topic. I'd also like to thank the Director, National Insurance Academy, Mr. Srinivasan. Without his guidance, this seminar would not have been a big success till now. I'm sure this seminar is going to be a big success after the pre-panel discussions are over. I also thank all the press people who are present and we're covering this inaugural address. I would also request them to stay back to continue to be present to listen to the three important panel discussions on changing customer expectations in the post-pandemic world, leveraging digital technology, and also on the regulatory interventions and product offerings. Let me also thank all the delegates who have been here, the attendees, the employees of insurance companies, and also our delegates who are from abroad who have joined this in seminar, irrespective of the time zone, because this is an important seminar which we always look forward to. So thank you, friends. Wish you all the best. I would request everyone to stay safe so that the pandemic will be defeated. Thank you.
Thank you.
Over to Shalini.
Thank you. Thank you.
Thank you, Venugopal sir. Ladies and gentlemen, we will now have the first round of panel discussion, but after a short break of 15 minutes. So please stay connected to hear the industry leaders. We'll resume at 10:45. Thank you.
Thank you, sir. Thank you.
Excuse Excuse me, what will you do with your first salary?
So I would like to present my first paycheck to my father.
I'll buy a laptop for my younger brother.
I will save some money and with the rest I'll get an AC for my dad's room.
I'm going to start a life insurance policy. I think it's very important for my family's security.
हाय, आप अपनी पहली सैलरी कैसे खर्च करेंगे?
डेफिनेटली कुछ पैसे इन्वेस्ट करना चाहूँगा।
मैं अपने छोटे भाई के लिए स्मार्टफोन खरीदूंगी।
मैं अपनी पहली सैलरी अपने पापा मम्मी को देना चाहूँगा।
मुझे ट्रैवलिंग का बहुत शौक है।
मैं लाइफ इंश्योरेंस पॉलिसी लूंगा क्योंकि वो मेरे और मेरी फैमिली की सिक्योरिटी के लिए जरूरी है।
ये जगमगाती ज्योति विश्वास की, ये रोशनी सुरक्षा के साथ की, ये सफर है जो अपना कितना सुहाना, ढल जाए नए रंग में संग ये जमाना। हर बरस लागे जश्न जश्न, हर बरस युवा हो उमंग उमंग, पाएगा हर दिल अपने सपनों का ठिकाना। हर बरस लागे जश्न जश्न, हर बरस युवा हो उमंग उमंग, पाएगा हर दिल अपने सपनों का ठिकाना। ये जगमगाती ज्योति विश्वास की, ये रोशनी सुरक्षा के साथ की, ये मुस्कुराती पारी 65 साल की, ये गुनगुनाती यारी हर पल आपकी, ये जगमगाती ज्योति विश्वास की।
जगमगते साथ का है ये जश्न। LIC turns 65 years young.
हेलो अतुल।
हाय माँ, यहाँ रात हो रही है माँ।
सॉरी बेटा, बहुत याद आ रही थी। ओके बाय 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 बाय।
माय पेरेंट्स, मेरे लिए ना कॉलेज चुना ना सब्जेक्ट्स, बट उनका प्लान था बहुत ही स्पेशल, जिससे बन गया मेरा फ्यूचर।
LIC का न्यू चिल्ड्रंस मनी बैक प्लान, जो आपके बच्चों का फ्यूचर करे प्रोटेक्ट हर जरूरी मोड़ पर।
इट्स अ फ्यूचर बिल्डिंग प्लान।
गाइस कल मेरी नई बाइक आ रही है।
ग्रेट, तब तो आई विल कम विद रोहन एवरी डे।
इंश्योरेंस है? तुझे क्या लगता है? इंश्योरेंस PUC सब कुछ है। आई वाज टॉकिंग अबाउट लाइफ इंश्योरेंस फॉर सिया।
जोक्स अपार्ट गाइस, बट आज मजा कल सजा नहीं होनी चाहिए।
सीरियसली, लाइफ इंश्योरेंस तो जरूरी है।
LIC का न्यू जीवन आनंद देता है डबल फायदा, मैच्योरिटी पे मिले फुल पेमेंट और लाइफ कवर चले जिंदगी भर।
इंश्योरेंस है क्या?
पूजा जॉब छोड़ा फिर भी सो कूल।
ब्रो, नए चैलेंजेस नए मौके लाते हैं।
अच्छा,
सीरियसली राहुल, मेरा पूरा घर नाउ इट्स एन ऑनलाइन रिटेल स्टोर। देख।
वाओ, लेकिन पैसे?
कुछ साल पहले दिवाली बोनस को इन्वेस्ट किया था।
और अब तो है LIC का यूलिप प्लान निवेश प्लस। एक बार इन्वेस्ट करो, इंश्योरेंस से सुरक्षा का लाभ और मार्केट की बढ़त का फायदा दोनों पाओ।
वन सेक राहुल।
मैडम, यू आर डबल कूल।
My journey of insurance and investments began at the same time when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ।
मेरे पास तो कई लाइफ्स हैं, मुझे लाइफ इंश्योरेंस की क्या जरूरत, लेकिन आपके पास तो एक ही लाइफ है। अपनी फैमिली को सिक्योर कीजिए LIC के साथ। LIC, जिंदगी के साथ भी, जिंदगी के बाद भी। मेरे पास तो कई लाइफ्स हैं, मुझे लाइफ इंश्योरेंस की क्या जरूरत, लेकिन आपके पास तो एक ही लाइफ है। अपनी फैमिली को सिक्योर कीजिए LIC के साथ। LIC, जिंदगी के साथ भी, जिंदगी के बाद भी। मेरे पास तो कई लाइफ्स हैं, मुझे लाइफ इंश्योरेंस की क्या जरूरत, लेकिन आपके पास तो एक ही लाइफ है। अपनी फैमिली को सिक्योर कीजिए LIC के साथ। LIC, जिंदगी के साथ भी, जिंदगी के बाद भी।
Excuse me, what will you do with your first salary?
So I would like to present my first paycheck to my father.
I'll buy a laptop for my younger brother.
I will save some money and with the rest I'll get an AC for my dad's room.
I'm going to start a life insurance policy. I think it's very important for my family's security.
हाय, आप अपनी पहली सैलरी कैसे खर्च करेंगे?
डेफिनेटली कुछ पैसे इन्वेस्ट करना चाहूँगा।
मैं अपने छोटे भाई के लिए स्मार्टफोन खरीदूंगी।
मैं अपनी पहली सैलरी अपने पापा मम्मी को देना चाहूँगा।
मुझे ट्रैवलिंग का बहुत शौक है।
मैं लाइफ इंश्योरेंस पॉलिसी लूंगा क्योंकि वो मेरे और मेरी फैमिली की सिक्योरिटी के लिए जरूरी है।
ये जगमगाती ज्योति विश्वास की, ये रोशनी सुरक्षा के साथ की, ये सफर है जो अपना कितना सुहाना, ढल जाए नए रंग में संग ये जमाना। हर बरस लागे जश्न जश्न, हर बरस युवा उमंग उमंग, पाएगा हर दिल अपने सपनों का ठिकाना। हर बरस लागे जश्न जश्न, हर बरस युवा उमंग उमंग, पाएगा हर दिल अपने सपनों का ठिकाना। ये जगमगाती ज्योति विश्वास की, ये रोशनी सुरक्षा के साथ की, ये मुस्कुराती पारी 65 साल की, ये गुनगुनाती यारी हर पल आपकी, ये जगमगाती ज्योति विश्वास की।
जगमगते साथ का है ये जश्न। LIC turns 65 years young.
हेलो अतुल।
हाय माँ, यहाँ रात हो रही है माँ।
सॉरी बेटा, बहुत याद आ रही थी। ओके बाय 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 बाय।
माय पेरेंट्स, मेरे लिए ना कॉलेज चुना ना सब्जेक्ट्स, बट उनका प्लान था बहुत ही स्पेशल, जिससे बन गया मेरा फ्यूचर।
LIC का न्यू चिल्ड्रंस मनी बैक प्लान, जो आपके बच्चों का फ्यूचर करे प्रोटेक्ट हर जरूरी मोड़ पर।
इट्स अ फ्यूचर बिल्डिंग प्लान।
गाइस कल मेरी नई बाइक आ रही है।
ग्रेट, तब तो आई विल कम विद रोहन एवरी डे।
इंश्योरेंस है? तुझे क्या लगता है? इंश्योरेंस PUC सब कुछ है।
I was talking about life insurance for Sia.
जोक्स अपार्ट गाइस, बट आज मजा कल सजा नहीं होनी चाहिए।
सीरियसली, लाइफ इंश्योरेंस तो जरूरी है।
LIC का न्यू जीवन आनंद देता है डबल फायदा, मैच्योरिटी पे मिले फुल पेमेंट और लाइफ कवर चले जिंदगी भर।
ए हेलो, इंश्योरेंस है क्या?
मुझे जॉब छोड़ा फिर भी सो कूल।
ब्रो, नए चैलेंजेस नए मौके लाते हैं।
अच्छा,
सीरियसली राहुल, मेरा पूरा घर नाउ इट्स एन ऑनलाइन रिटेल स्टोर। देख।
वाओ, लेकिन पैसे?
कुछ साल पहले दिवाली बोनस को इन्वेस्ट किया था।
और अब तो है LIC का यूलिप प्लान निवेश प्लस। एक बार इन्वेस्ट करो, इंश्योरेंस से सुरक्षा का लाभ और मार्केट की बढ़त का फायदा दोनों पाओ।
वन सेक राहुल।
मैडम, यू आर डबल कूल।
My journey of insurance and investments began at the same time when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ।
मेरे पास तो कई लाइफ्स हैं, मुझे लाइफ इंश्योरेंस की क्या जरूरत, लेकिन आपके पास तो एक ही लाइफ है। अपनी फैमिली को सिक्योर कीजिए LIC के साथ। LIC, जिंदगी के साथ भी, जिंदगी के बाद भी।
Good morning.
Good morning.
Hi,
Good morning,
good-
sir.
How are you?
Good morning.
Good
Hi,
morning.
Naveen. Hi, Kamlesh.
Good morning, Mr. Rajkumar.
Good morning, sir.
I think Kandan has to join. He was there.
I think he's waiting in the lobby. Morning, Karan.
Good morning. Good morning.
Welcome back,
Good
Mr.
morning.
Kandan. Yeah.
Thank you, sir. Thank you.
Chika, we can start.
Sure, sir. Welcome back, ladies and gentlemen. We are here for round one, which will be a panel discussion round on the topic changing customer expectations in the post-pandemic world. For this round, the moderator is Mr. Rajkumar, Managing Director, LIC of India. And in the panel, we have Mr. N.S. Kannan, MD and CEO, ICICI Prudential Life Insurance Company Limited, Mr. Naveen Tahilyani, MD and CEO, Tata AIA Life Insurance Company Limited, and Mr. Kamlesh Rao, MD and CEO, Aditya Birla Sun Life Insurance Company Limited. I now request the moderator, Mr. Rajkumar, to kindly commence the discussion. At the end of the discussion, he may also take up some questions from the audience. So the audience may type their questions in the Q&A section. The audience questions would also be visible to the moderator as well as the panel members in the Q&A section. The panel members are also requested to keep their cameras turned on during the course of the discussion. Thank you.
Thank you, Ruchika. So good morning to everybody who is there in the audience, and Happy New Year to all of you. I also welcome my colleague panelists, Mr. Kannan, Mr. Naveen, and Mr. Kamlesh. So, you see, this universe was created many billions years ago, and it's ever changing since then. There has not been a nanosecond when it has not changed. It is governed by certain laws of physics, and everything conforms to that. The Earth was also created some billion years ago, and it's changing since then. The life evolved some million years ago on this Earth, and the Homo sapien erectus, that's the human beings in the current form, evolved also some million of years ago. They are distinguished from other living beings by having an intellect, emotions, attachments, preferences. All these things lead to expectations. Certain expectations arise because of legal rights also, which are very important in a business world, particularly in life insurance business. Expectations can be beyond legal rights also, and may be triggered by certain events which may be controllable or uncontrollable. The world presently is passing through an era where no one has remained unaffected by COVID-19 pandemic. There was a pre-COVID world. There is a world which is dealing with COVID-19, and there would be a world post-COVID-19. So my first question goes to Mr. Kannan. How do you relate to these three phases which the world is witnessing or is going to witness? Thank you, sir. I hope I'm visible and audible. Yes, sir.
You're audible.
Thank you. Good morning to all of you who are participating in this conference, as well as the fellow panelists and the panel leader. I would like to, first of all, thank the Director NIA and Mr. Venugopal for inviting me for this panel discussion. I look forward to very fruitful discussions through the day. And I would also like to take this opportunity, as Mr. Rajkumar mentioned, to convey best wishes for a great new year to all of you and your families. So, sir, to answer your question, I will take it in three phases. How life was in the context of life insurance pre-COVID, then during COVID, and I would say post-COVID, hopefully, though we are amidst the third wave. Pre-COVID, as we all know, the life insurance has always been a push product. And that is the way it was. It was always said that it was sold and not bought. And term insurance was available, but was not really pushed. Even that push was not, that was confined to the savings products. And technology was always available. I think a lot of companies took the lead, including LIC, in terms of technology, but the adoption was something which was suboptimal, I would say, if I can use the term. And always it was a work from office model. And the boardroom discussions have been more around business aspects. This has been the scenario across various dimensions
in the pre-COVID world. And during COVID world, things changed quite rapidly. And I'm sure my colleagues will also support this. We have seen a huge demand for term and health products. And of course, there's been a lot of friction around fulfillment, but definitely there's an increased awareness and demand. And the life insurance is becoming from push to slowly to nudge. I wouldn't say that it has still become a nudge or a pull product, but slowly the journey, we seem to be progressing in terms of awareness because of the loss of lives and livelihoods. And from an employee perspective, work from office has given way to work from home. And that necessitated a huge overhaul of the IT infrastructure, various workarounds to get the processes in place for work from home environment. Then the technology, while as I said, it was there, it started getting accelerated in terms of adoption. And the boardroom discussions, you would agree with me, sir, that they were more of people environment focused rather than just being business focused. So that is the phase we have gone through in the last couple of years. Post-COVID, how do I see this evolving? One, I think definitely customers will have more appreciation of human life value. Rather than thinking about just their house or automobile and so on, there will be definitely a more understanding of human life value as we move along. It will eventually, I'm sure, will become a pull product. From a working perspective, I think it will be a hybrid model. Some parts work from home, some parts office, and that's going to give a lot of boost to productivity as well as wellness and the well-being of the employees. Technology, I think, while there is more focus in the past has been on service, even on the pre-sales and sales side, there could be a huge impetus to technology adoption. And I think one of the areas I'm seeing there's a lot of progress is around the ESG principles, environment, social governance principles, coming along both from expectation from employees' perspective, investors' perspective, and so on. So in this context, to answer your question, what is the kind of thing we foresee in the next decade or so? I would first of all, sir, say that decade is too long a time frame. As the events of the immediate past has taught us, I don't think I can say that I know what's going to happen in the decade, but I know for sure that 3 years back, what we were doing is quite different from what we are doing today. So I do believe that I'm hoping and praying that it will not be a pandemic instigator changes in the future, but it could be different types of disruptions which can happen. So I think first learning for all of us is that we have to be nimble and adaptive to see what's happening and quickly adapt ourselves. I think the agility, nimbleness, or whatever you want to call it, I think that is going to be the big sort of focus for the next decade is what I would say. And some of the trends I'm seeing will get embedded is customers have got used to convenience now, sitting from home, doing pretty much getting everything, even instant gratification, 10 minutes delivery of grocery. So the customer expectations are changing rapidly, and same thing, we are also going to be at the receiving end of this expectation. So we have to adapt. And as I said, the second trend would be potential increase in demand for life insurance products. The third trend, as I said, would be in end-to-end technology adoption. I think, yes, it is intermediated industry. It will probably continue to be in large part, intermediated industry, but end-to-end technology is going to play a big role. And the fourth trend is that I do believe that customers will get more conscious of their impact on the world. I talked about ESG. I think that is going to happen from the customer's expectation as well. So the convenience, increase in demand for life insurance products, especially the human life value and term products, increased technology adoption, and increasing consciousness, so to say, about their impact on the world. These few trends I am seeing happening in an increased manner in the next 10 years. So long answer to a short question, sir, but I thought I'll just put it in perspective in terms of the journey as well as what we are likely to see in the future. Thank you.
Yes, Mr. Kannan, you have rightly put the things in perspective. And I do agree with you that decade is too long. Probably it will be a very near future the insurers have to look into. Mr. Naveen, my next question is to you. What changes do you foresee in customer behavior and customer preferences from financial markets and particularly in life insurance market?
Thank you. Thank you, Mr. Rajkumar. Good morning to you, Kannan, Kamlesh, and a very happy new year to all the people who are participating, and most importantly, a healthy new year. to all of us. Mr. Rajkumar, I must say, you've kind of taken this panel discussion off to a fantastic start by putting life in perspective over the last billions of years from the evolution of the universe. And what that triggered in my mind was a fascinating analogy based on what you said, that, the universe has been in existence for the last 13.5 billion years or so. And life, as you said, evolved over the last many million years, hundreds of millions of years. But life has evolved, at least as far as we know on this earth, in response many times to some cataclysmic events. So, as you know, there have been, geologists say there have been 5 cataclysmic events which have, forced life to evolve, and we are products today of that evolution. And what that triggered in my mind in a very small way, of course, we hope COVID is not a cataclysmic event, but it is a significant event. It is a very significant event, and we've called it once in 100 years type of an event. I think that has forced everybody to evolve very differently. And as I answer your question on what has it done to the consumers, I'll just come to that in a minute. But I just wanted to add one point to what Kannan mentioned, and he covered everything very comprehensively and eloquently. But I think all boundaries of traditional science, traditional business have been kind of proven to be flexible as a response to this pandemic. And what I mean by that specifically is, if you take the example of healthcare industry, right? It was normal for vaccines to take 10-15 years to develop. It was seen as, lightning fast in the world of vaccines. And today what has happened is, in years or even months, we've had vaccines which have proven to be effective. We've had new technology of vaccines, mRNA, now we are talking DNA vaccines. And the reason I give this example is that not just the vaccine players, but the regulators have kind of innovated to bring this out. You look at our own example in India, today we are sitting on more than 150 crore doses. I mean, technology, deployment of this new infrastructure has enabled us to administer this 150 crore doses. So the point I'm trying to make is that consumer expectation is a function of the response of the industry as well. And while their expectation will change as a result of the pandemic, and everything that Kannan said is true, that they will value their lives a little bit more, they will pay, be conscious of protection rather than just savings. It is also, their expectation is also an opportunity for us to shape. Having said that, I think a few points I would like to make. Some things which will not change, which are not changing in this market also, to highlight that. Firstly, I think Mr. Ganesh and Mr. Kumar mentioned this. In India, the fundamental problem we have is the large protection gap. $17 trillion of protection gap, 83% protection gap. If you translate that into rupees, it will be 1 followed by 15 zeros. That's the size of the protection gap we are talking about. And, it's enormous. This protection gap will only get bigger because protection gap is a function of income. And I think incomes are poised to rise over the next decade. So I am now, looking at all the macro data that we have and stepping away a little bit from the pandemic here and now, because the theme of this conference is reimagining life insurance in the next decade. So over the next decade, household incomes are expected to grow 2.5 to 3 times. As that happens, protection gap will only expand. Longevity will increase, right? There is a fascinating study by Lancet which says India's population will decline, but longevity will increase by about 7 to 8 years in the next 30 to 40 years. There is going to be a large segment of pre-retirees and retirees, as much as 25 to 30 crores in the next 7 to 8 years. And yes, awareness of these consumers is increasing, right? Their understanding of life insurance is increasing. So I think all of this put together kind of creates the right fertile ground for some of the market changes that we will see. In many ways, technology, data, digital emergence will fundamentally or has the potential fundamentally to change how we approach our consumers, not just for sales, but for after sales as well. And we can talk about it in detail as we go along. The only last point I would make is that as far as market and consumer evolution is concerned, I would just like to submit, sir, that we should be very nuanced about this. There is no one consumer out there. There are different types of consumers. There are, HNI consumers. There are business consumers. There are mass market consumers. There is the belly of India, which is the middle class, which is a different type of consumer. And then there are rural consumers, where I think a lot more can be done as far as life insurance is concerned. And I think over the next decade, while there are some common trends in terms of protection gap, in terms of digital, in terms of better awareness of these customers, the way these customers will evolve, what they will expect, and how we as life insurers will serve these customers will fundamentally become different and more sophisticated as we go forward. And again, it is up to us in terms of how we address the diverse needs of these different segments, do justice to them, and fundamentally do justice to the opportunity that our country presents of addressing the protection gap. So I'll pause there, sir. Hand it back to you.
Yeah, thank you, Mr. Naveen. I take it from your discussion that the response mechanism and response time, which is becoming very, very important to certain events which is happening in the world. Mr. Kamlesh, I would like to understand from you that what would be the customer needs, which are forever changing, and so are their expectations. What, in your view, new product offerings and innovations life insurance companies need to bring out in order to meet the customer needs as well as their expectations in future?
So good morning to all of you, and warm welcome to all the fellow panelists of mine and all the people who are attending this conference. I came new to the life insurance world after being a banker and a equity market guy for the last 25 years. And if I draw a parallel in terms of changing customer expectations, I think life insurance industry has genuinely a lot of work to do. In the last 2.5 years, I must admit, COVID or the pandemic has kind of catalyzed the entire digital enablement process. And I still must warn ourselves that we have just started the process of digital enablement. Whereas the expectation of the customer today is very different from where we are. And I think it has got accentuated over the last 2 years' time, because nobody is moved out for consuming what he needs. I mean, a lot of us, I can include myself, has never been an online guy for so many years. And today, all the online applications are an integral part of my mobile phone, for various things that I consume. So if at my age bracket, if things have changed, it gives you an idea of what would be the change that is happening down the line. And therefore, our products that we bring in, I think there are two important things. Our products need to be simpler. And, in cricket parlance, we should be a little more clearer. What pitch are we playing on? Kannan and Naveen spoke about the entire protection gap and the opportunity that we have in the marketplace. But genuinely pure protection in terms of the term products that we do is not more than give or take 8-10% of the entire business that we do. We have a lot of interesting products. Our products on the guarantee platform is akin to, say, a fixed deposit that banks offer. Are we playing on that pitch or no? I think is important for us to think through. Our ULIP products, if we kind of create an opportunity, can they pitch on the mutual fund savings platform? I'm not talking about competing with products, but being in the mind space of the customer, that it's not about life insurance, but it's an integral part of your financial planning process. And I think if you find a place there, for us, things will be significantly more different than what they have been. And I genuinely believe that the pandemic has provided an opportunity for life insurance to maybe achieve in the next 3-4 years what we've achieved in the last 10. And we should only kick ourselves if we don't capitalize on the opportunity. Like Anand said, we may not have got a pull, but the nudge moving to a pull is extremely large in the marketplace today. And therefore, when a consumer is buying a product, we should be able to change our process of sale. And I'm not really worried about whether it will be intermediated, direct. I think in every area, whether it is the agents, whether it is the banker partners, whether it is direct, what is important is going to be data. How much of the data of a customer can we pre-populate onto our application form? How can we make the buying journey simpler? Today, in the process of buying life insurance, I think the ability for the customer to understand the product is very long. How can we make that shorter? How can we make that simpler for the guy to be able to go, for millennials to be able to go on an online platform and just consume what he wants to, so he knows what he's buying? I think there needs to be a considerable shift in our own mindset as customers. And if we think like that, ability of life insurance to become an integral part on a financial planning tool of a customer, and therefore it is needed whether you are a 25-year-old guy or a 35-year-old guy or a 50-year-old guy. And there are so many opportunities. Like Naveen said, if you look at data, the number of people who will cross 60 years in India over the next 5-10 years will actually double than where it is today. And therefore, annuity is a very large opportunity for a life insurance company. It's a very small part of our business today. And the might of life insurance companies distribution, if it can take care of this need of annuity for a population that is going to age beyond 60 in the next 7-8 years, that's the great opportunity that we have. So I just think that we got to move on to what pitch we are playing on as life insurance companies, move into areas where an integral part of what we can do in financial planning, savings, and provide every product of ours provided the protection to the customer, which not every financial product actually provides. And pockets like competing with a deposit or a mutual fund, or say play on the annuity part of the opportunity that is there. I think these are large things that we need to change, and that is what makes me believe that what we can achieve in the next 3 or 4 years, courtesy what has happened in the pandemic, and everybody's looking at life insurance very differently from what they used to look at some time back, is our great opportunity, and we should find a way to make sure that we capitalize on that.
Thank you, Mr. Kamlesh. You did talk about that there is a need for simplicity of products. It will be very easy for the prospective customer to understand. We did listen to Mr. Kignesh and Mr. Kumar, and they talk about that the Indian population, which is at presently more than 140 crore, and out of that, almost 60% is falling in the working category, working class category. But if we look at the total insured population, it is it up to the expected level, or life insurer need to do something? And if that be so, what life insurer should do as an individual platform or at a collective platform? How do we address this population which is insurable, but presently they are not having a single policy? This question I'm putting to Mr. Naveen.
Thank you, sir. I think, I would like to break up your question into 2 parts. One is population which doesn't have insurance, and how do we reach them? And second is population which has insurance, but not enough.
Not enough.
And probably, not probably, we know, sir, from the data that we have, that very likely they don't even understand that they don't have enough insurance. And so let me take this in these 2 parts. I think the first part, where we are talking about the fact that there is sections of populations which don't have insurance at all. I think their technology, digital, simpler products, that's really something that we as insurers need to adopt and make sure that these customers are able to understand the proposition. It is very simple and affordable for them, and it is a flexible proposition as well. What do I mean by that? I mean, a great example actually is PMJJBY. All right, it's a simple product to understand. It is enabled on technology, and if you look at the opportunities that we today have as life insurers, we can collaborate with a whole bunch of intermediaries, some traditional, some non-traditional, to reach the mass market population, to reach the rural population which is non-insured. Again, to give you a specific example, if you look at the whole business correspondent network that banks have, if you look at the whole CSC platform that is available today, which is reaching a very large number of villages in the country, through these platforms, through innovation of simplified products, through digital payments, there is a lot of work ahead of us to reach these consumers, educate them, and then convert them into insured customers. I think that's one part of the equation. Part of this equation will also mean, or part of solving this equation will also mean educating the intermediaries who will help us do this. And that's also a significant task ahead of us. The second and equally pressing part of the equation is, people who have a policy but don't understand that they are woefully and inadequately covered. And that is where I go back to the point I mentioned, that the protection gap in our country is 83%, which means on an average, if an Indian needs to have 100 rupees of sum assured, they have only 17 rupees. And they don't even understand that, they are undercovered by a factor of 5 or 6. And this is where I think the point you made, sir, just now, that this is a problem I think we have to solve together as an industry. And it is not about individual insurers. It is about all of us coming together to educate the consumers through different kinds of initiatives and make sure that they understand that they are missing out on a very important need in their lives. Now, yes, of course, we all hope the pandemic has made people more and more aware of these needs. But I think it needs constant reinforcement. If you look at data of digital searches on term, the data on digital searches on term over the last 2 years is perfectly correlated with the peak of the pandemic and the trough of the pandemic. So we've seen it in wave 1, we've seen it in wave 2, we are seeing it in wave 3, that when the pandemic goes up, number of cases go up. Consumers, remember term and life insurance, and they go and do digital searches. And the minute we get back to normal, right, they kind of forget and they go back to business as usual. It's a little bit like when we are in the peak of the wave, we remember to wear a mask, but when things seem to get normal, we forget the mask.
Yes.
So I think it needs constant reinforcement, sir, to all these people. And I think that is where the industry has to come together and collaborate over a period of time. This is not going to be a 1 day, 1 week, 1 month, 1 quarter, 1 year effort. This is going to be a multi-year effort to educate the consumers on what they are missing out as far as their life insurance is concerned. And then coming from this, once we create the awareness, some of the points that again Mr. Ganesh, Mr. Kumar so eloquently covered is about having simpler products, making it easier for them to purchase, covering the different needs, using technology, digital to ease up the sale of purchase as we move forward. I think that's what we will have to do. And Kannan has kind of again covered that in his opening remarks. But it is fundamentally predicated on building that awareness. And that is where the industry has to collaborate and create that platform in a sustained manner and move us forward.
Thank you, Mr. Naveen. Naveenji, I tend to agree with you. When some external event like COVID-19 pandemic happens, a general awareness comes, and once it is not there, that goes down. From my personal experience, I can also narrate that in the 80s, when the Punjab was going through a very bad phase, and equally bad phase was there in J&K, and I was in both places at that point of time, worked there in 1989. And we saw that this sudden awareness going up, and life insurance in corporation at that point of time, it was only corporation. Fantastic growth in life insurance business in both states. But once the terrorism was wiped out from Punjab, it fell down drastically. How do you think, Mr. Kannan, that the life insurers, as Mr. Naveen rightly said, we have to have sustained efforts as a collective forum. How do we sustain that kind of awareness in the future? This is a very relevant question, which I request you to please elaborate upon.
Yeah, thank you, sir. That's absolutely right. And I completely agree with Naveen that when the immediate threat goes away, the memory also goes away. I think that's normal human psychology. And it is an opportunity for us to make sure that any crisis like this doesn't go to waste. I think that is very critical for us. I'm not saying that we should be doing a fear mongering or anything like that. That's not the intent at all. We don't want to revive in the memories of citizens the horror of pandemic. That's not the point. But it is more like looking forward to say that it's a constructive campaign, I would say. That is something which is very relevant to say that don't you want to be prepared for any eventuality. So to answer your question, sir, some of the thoughts which come to my mind are that there are a lot of people who have, or rather partners who have access to the larger population of the country. So the last mile is covered by several of them, not just the life insurance industry. So I think Naveen alluded to that how do we partner and make sure that we get this insurance propagated through those partners. I think that will become critical. We can't say that we ourselves can do the job, but we'll have to ride on various sort of partners and ecosystems which are available, which has tie into the end customer. May not be for insurance today, but it could be for other financial services. I think Naveen talked about a couple of ecosystem players. We have seen post offices, rural banks, and so on. And some of these product innovations he talked about. Whether we like it or not, sir, sometimes we have become a little bit esoteric and jargon oriented. And also, I think remember Mr. Ganesh talked about it. A little bit complicated when it comes to conveying the features of policies. So I think the proof of the pudding is sometimes in the eating. For example, we talked about technology. It's not because of technology for the sake of technology that it has won in the last 2 years. It's because of the customer convenience ultimately, and people get greedy about technology because they have tasted convenience. So yes, awareness is very critical. We'll have to keep on reiterating as an industry and also through partners. But ultimately, the proof of the pudding is in terms of buying a policy, getting the benefits of the policy, and then that itself working as a positive reinforcement in terms of more people through word of mouth going and buying insurance. Yes, PMJGY is a great starting point in terms of a simplification for a larger population. Such kind of work also has to be done. And I think we can do a lot more. I think LIC has done it phenomenally well in terms of some vernacular initiatives as well. Sometimes sitting in Mumbai or somewhere, we tend to focus on certain types of customers, which is also an opportunity. Deepening of insurance, like Naveen said, that's also an opportunity, but widening of insurance may have to have much more in terms of vernacular initiatives also. I think these are some of the areas where we could, push forward in terms of not just, making the awareness better, but also simplification and ease of buy also better, so that itself leads to more awareness among the larger population. Those are the couple of points I would like to add to what Naveen has already mentioned in this context.
Thank you, Mr. Kannan. Yes, it's true that the vernacular initiatives also are required because the country is a very different country. It's not I won't say it's a uniform, it's amalgam of many cultures, many aspirations, expectations, everything. We are talking about, and one focal point coming again and again, the discussion is the technology. Now, what we see is that today's world is wired through technology, and which is changing very fast. The digital technologies has completely changed the world as it used to be, and it came in the discussion that I think Mr. Kamlesh was talking about that even at our age, we are now becoming tech savvy. Now, customers at large are also have experienced this benefit of technology. So, what technological initiatives or innovations life insurers need to bring out to provide improved digital experience to the customers, particularly to the millennials? And I request Mr. Kamlesh to share his views on this point.
Mr. Kaur, I think there are different stages or touch points that I say when we are addressing a life insurance customer. And therefore, we got to look at different points of time how we are presenting ourselves to the customer and how our customers consuming bulk of their other products, which is not financial. I think that's one big difference. We normally think that financial products can be a little more complicated or the process can be a little more longer because we think there is some risk involved with that whole process. I don't think consumers think like that. And therefore, say when we are selling life insurance, that's one place that I'm first taking. I think our ability to be able to not know the customer well, like the e-commerce partners know their customers well, I think is one first fundamental difference that we need to bring in. How do we know more about our customers? You know, I used to keep saying this, and I used to be in the lending business, that don't remember your customer only when the EMI is due. So don't remember the customer only when the renewal premium is due. Find a way to engage with that customer during his lifestyle. And I think the regulator has now brought in the element of wellness in life insurance, which is, I think, a very fantastic way to engage with the customer through the entire period. And that's one of the ways we can, also make sure that the memory of that customer, which Kannan and Naveen spoke about, keeps going on and off. How can we find a permanent place in the mind of those customers? So that could be one great way of doing it. And therefore, if data is easily populatable, and in the buying journey, I can make the process of the product that he wants faster and not the consuming process, then I think that can make a big difference. We need to create digital innovations in that area, and that has got to do much with data, which we can ping from ecosystems. There are regulatory bodies from where you can ping data, and the IRDA has facilitated some of that over the last 2 or 3 years time frame. The second is during the lifestyle journey of the customer, okay? And because insurance finally is a long product. I mean, it's a 30-year product, it's a 40-year product. And we don't do enough during the 30, 40 years for the customer to remember. I looked at one research when I came into the life insurance world to say how many customers even remember which company they bought their life insurance from, okay? And I think not more than 3 out of 10 customers actually remember because they bought it some time back and they haven't been engaged with that company for a very long period of time till the proof of the claim process will actually kind of come in. The other thing is the proof of course, life insurance companies is in the claims. And in the pandemic time, I mean, we've seen claims, significantly 5 times, 6 times, 7 times more. But I, for one, because I came new to this industry, saw the level of difficulty that the dependents don't know what they are supposed to do when they're supposed to do the claim process. And therefore, I think it's an important requirement for life insurance companies to say even the nominees know during the period of time that the life insurance guy is there with us, as to what is the process. Can we make that available on our websites more clearly? Can we communicate and have an interaction with those nominees more clearly? Now, all that I'm saying at different touch points of the life insurance process, whether it's buying, whether it is during the time you're paying the premiums, or when the proof of the concept is during the claim, if we don't do it differently, I don't think we will see the kind of growth rate which we've enjoyed in the last 2 or 3 years. If you want that to sustain for the next decade, like you said, I think some of these things we need to work on for sure. And everything has to be available for the customer. I think that's one big shift that we need to make. I like I said, I'm now on a Swiggy or a Book My Show far more efficiently than what I used to be before. But if you have a problem with any of your apps, it's very difficult to find a contact center number because the app is created in a fashion that everything that you want can be sorted there. I think that is what the millennial is asking for, that if I have a problem, if I have an issue, I should be able to find a solution by you not telling me, but by me finding out on your platform, on your website, your solution that you're offering. I think that's one big shift that we need to make because traditionally life insurance has created a structure where everything is what we think we want to inform. We want to communicate. So there is a dependency, human dependency for the customer to know about what he's bought. And that needs to become genuinely digital. I think that's one big shift that we need to make. And when we do that, and I think it's happening pretty fast over the last 2 years' time, I must say that for the life insurance companies, we need to accelerate that entire process. And that's when our experience of buying life insurance will become similar to everything else that the millennial or the consumer is buying today. And that will give us a better positioning in the minds of the customer.
Yeah, Mr. Kamlesh, I fully agree with you. The demographic structure says that the 40% population is all falling in the millennial segment, and they are going to derive the country in the future. Simultaneously, India being a very young country as compared to many other demographies, this segment need to be involved in the life insurance business also. And since they are very tech savvy, they want the solutions on fingertips rather than visiting a physical office. And as Mr. Kumar was talking about, of course, we need to have a physical kind of environment in the future. Uh, Now, what kind of new marketing and distribution strategies that life insurers need to adopt to capitalize on the improved insurance awareness which we would like to create in future and the technological interventions? And I request Mr. Naveen to deliberate upon this question.
Thank you, sir. I think in terms of marketing or distribution strategies for the future, that has to be linked. Marketing and distribution has to be linked to what we are offering. And just on the same theme of reimagining life insurance, I want to spend a minute on what is it that we are offering. Kamlesh made a very important point right now on saying that, people don't remember after some time that which life insurance company, what policy, what are the benefits, right? What have they actually bought? Mr. Kumar in his address made a very, very fundamental point. His point was that, look, we are doing point of sale underwriting. And we are writing very long-term policies, 30 years, 40 years, sometimes longer. There are policies which cover you up to 100 years. And our marketing and distribution comes second, but what we are offering comes first. And this is where I think we have the big challenge and a big opportunity. There can be two customers, say 40 years of age, 30 years of age, millennial. We give them a policy basis medical underwriting as of today. But over the next 60 odd years or 50 odd years that they will live, their paths can be very different. And therefore, the implications on morbidity and mortality of those customers can be very different. But today as an industry, we don't differentiate those customers. So what I'm saying is two customers at 30 years of age, similar. 10 years later, one is much healthier than the other, but they are paying the same premium. They are paying the same premium that was offered to them at point of sale. And I think that is fundamentally disadvantaging the customers who are low risk because they have a better lifestyle, because they have better health habits, because they have bothered to take care of themselves. So I think, sir, the most fundamental shift we as life insurance companies need to bring about is to create a set of offerings where we can partner the customer through his or her life, where we can measure the health and wellness of the customer, and where we can flex our pricing of our product in line with what is the demonstrated health and wellness of the customer. Now, I would like to thank the IRDA. Mr. Ganesh also mentioned this, health and wellness guidelines, which are in the draft stage right now. I think if those are formalized, those will go a very long way in terms of changing the proposition of the life insurance companies to the customer. Because then what will happen is, then we will be able to engage the customer on not just once in a year when they have to pay a renewal premium, but on a daily basis to measure their health, to measure their wellness, and to do it very scientifically using all the different applications that are there, technologies that are there, health techs that are there that are able to measure the health of a customer. And we will become much more relevant to the lives of the consumers as we move forward. More importantly, consumers will benefit a lot more from life insurance than what they do today. I think if we are able to make that fundamental shift, and I call it moving from payer to partner. Today we are payers. Life insurance is a payer. We pay claims when an event happens. Could be a health event, could be a mortality event. But tomorrow we have this opportunity to become a partner and do what is right by the consumer. And I think that will define our distribution as well as marketing strategies of the future. Therefore, from a marketing perspective, we will be able to reposition ourselves. We will be able to simplify our offers. We will be able to add much more value to the lives of our consumers. From a distribution perspective, my view is, while we talk a lot about digital, I think Mr. Ganesh made this point, that while we talk a lot about digital, and clearly digital is the future, this is not a world of binaries. I think this is a world of multiplicity. So we will have various distribution channels. Agents, my view is, will for the next 20 years, 30 years, as far as I can foresee, continue to be super critical for the life insurance industry and the customer. The nature of those agents will change. Mr. Kumar called it a bionic agent. I love that term. I think it's a beautiful term which captures what the agents will have to do and evolve themselves to become tech-enabled, digitally focused, true advisors, right? Customizing the offering to the customers. But I think there is work to be done in terms of distribution strategy to enable this bionic agent. The way we work with banks will change as well. I think our bank assurance models today are still very much focused on a few parts of the bank, branch banking, physical world. That will change much more to digitally accessing a large number of customers, which banks themselves are finding hard to activate or hard to transact with. Right? You look at a typical bank data, and they will tell you that of the millions of customers they have, maybe 30% are really active with them. So what about the remaining 70%? I think we'll have to find strategies to activate those. I think new channels of distribution will emerge. So digital companies today, companies which are doing payments, right, and building such a fantastic ecosystem of offering convenience to customers on payments. Education technology companies, right? Online education has become a big kind of deal after the pandemic. They can become our distributors. They can become our partners. E-commerce companies are benefiting from this wave. There are companies which are advising people on parenting today, right? Birth of a child, we know, is one of the most important events in the life of a consumer. Can we partner with these companies to offer life insurance at the right time to young parents? Right. So I think this is the third class of new distributors who will emerge, and our distribution strategies will have to keep pace with that, which is digital companies. And number four, our own digital platforms. Each company's digital platforms will also evolve. But I think it is this multiplicity of how distribution across agents, banks, brokers, new digital companies, our own digital direct platforms, etc., will evolve. And I think we will have to have this multi-channel approach rather than just focusing on one or the other. But I go back to the fundamental point that distribution and marketing is a function of proposition. And I think in this decade, what we have to work with, along with the regulator support and blessings, is to change our proposition to the consumer. If we can do that, I think we would have reinvented, reimagined life insurance in this next decade.
Yeah, Mr. Naveen, thank you for your beautiful views. And I remember one ad which LIC used to have some 20, 30 years back. There are some 100 faces, and then the tagline would be, find the agent. Who is the agent among them? Probably now the time has come when the organization should be like that, as I like that word, that we need to be partners rather than just provider of life insurance. Mr. Karan, we have been talking about during this discussion about marketing and distribution, and one important part was which has been discussed by all the panelists is the onboarding, then servicing during the life cycle of the policy, and the claim stage. What are your views about the present claim settlement processes, whether they need some reimagining there also in life insurance companies?
Of course, sir. I would say that we can sell the products, we can increase awareness and everything. That's all right. I think Kamlesh alluded to it earlier, that the proof of the pudding or the moment of truth for the industry is the claim settlement. Right. Ultimately, we are here to help the families when there is a calamity in the family. I think that in trying to increase the penetration, increase the awareness, simplifying product, etc., we should not forget that our reason for existence as an industry is the financial security of our customers. and ensuring that we deliver the financial security when they need it the most. So to that extent, I think it is a core purpose of our existence. And I'm very happy to say that we are very fortunate as an industry where the core purpose only got enhanced or reiterated during the pandemic. So we are very fortunate to be having this license of delivering financial security to families in the hour of need. And the pandemic has only reiterated and made us even more relevant, I would say, today compared to what we were prior to the pandemic. So to that extent, any delivery of this promise in an expeditious manner is very critical. So I would only say that in this context, we can do a lot more. In this, I think Mr. Ganesh talked about our claim settlement having been increased to about 98%, which is great news. I think we should, all of us together should congratulate our own employees, staff, and everybody involved in ensuring, as an industry, I'm saying, a 98% kind of a claim settlement ratio, which I think is very good despite the challenges posed by the pandemic on the ground in terms of difficulty in doing investigations, etc. So that is an issue. So what can we do better in this area is that there can be a much more deployment of technology and the ecosystem data available in this regard as well. I think sometime back we talked about the ecosystem availability of data in the context of purchase of policy or selling of policy, but we can actually do it as well in the claim stage. So there is a huge amount of data available in the payment ecosystem already. So the idea is again to partner with the payment ecosystem, get the consent of the customer in terms of using the data, and using the partnership as a lever to access the ecosystem of payment data. We should not reinvent this because tremendous strides have been made in the digital payment ecosystem in the last 2 years specifically. That is one area where wealth of data is available, which with the customer consent should be used for the claims as well. So we can get the behavior of the customers. And other area which is emerging a big time in the ecosystem is the health data. So when you triangulate this, you have the payment ecosystem data, you have health ecosystem data, coupled with your own policy behavior of the customer in the past. I would say that you can do a straight through processing of claims, triangulating this data rather than asking more questions. So I think the key is that genuine claims to be settled in a matter of hours and not 30 days. That is one part. At the same time, keeping the fraudulent things out through the data, once again, through deep analytics, rather than subjecting a genuine customer to a multitude of, investigation related paperwork. I think that balance we can still get a lot more. I think the pandemic has accelerated the volume of claims, and each of us have found our own way of workarounds to ensure that the genuine claims are settled fast. But given these learnings, I think it can be much more seamlessly integrated going forward. Ecosystem leverage plus our own data leverage, genuine customer claims, a matter of hours, just keep only the fraudulent claims out. That is the key. And we should definitely not go about re-underwriting at the stage of claim. I think if we do that, we'll be doing a big disservice to the customers. So those are my points when it comes to claim settlement.
Yeah.
Thank you, sir.
Sure. Mr. Kannan, you raised two very valid points. One, the speed of delivery in terms of claim settlement. The other is, how to deal with the fraudulent claims, particularly that particularly. So, Mr. Kamlesh, what are your views that how the industry can collaborate on the issue of fraudulent claims? Because the same customer can go to the second insurer or third insurer also, and it has happened in the past also. And there were reports that one life insurer declined the claim, but the other settled it. It has kind of thing has happened. So how the life insurers can collaborate on this issue to eliminate these fraudulent claims from our ecosystem, and at the same time we address the needs of genuine customers in a superior manner?
No, I think it's a question very close to my heart. If you look at a parallel from the banking industry, how easy it is for today somebody who has defaulted on a loan to get money from any other banking institution, because the score, which is your credit score, and of course CIBIL is a pioneer there, so CIBIL score or whatever score is a benchmark, and if you've defaulted anywhere across the entire financial services system, be it a card or a car loan or whatever, through the entire banking and NBFC sector, that data is available. So I think it's extremely important for all the life insurance companies and the regulator to come together to have a data repository like this. Now, I know there is a guiding note on IIB to be that data warehouse, but I've always been of the view that why create something which has already been there in the first place? So if there's some learning that we can get from what has been created in the mutual fund industry with through a KRA, CERSAI or CIBIL, and if we can integrate it together, and obviously all life insurance companies have to be comfortable to pull in all their data into that place, because what you put in is good and what you get out will be even better. And therefore, when somebody is applying either for a life insurance policy, or whether it is during the time he's paying the money or during the time of the claim, if a repository is available which can get pinged into, and look at the kind of data analytics that if you have a repository, and assuming IIB can become that role, the amount of analytics that you can provide on the wealth of data that they will have will benefit the entire life insurance industry significantly. Another area is, post the pandemic or during the pandemic, I think health consciousness has gone up significantly. Now we are at a very ironical stage where, I want to buy a protection policy, but I don't want to go to the medical place to do my medicals because I am worried about contracting the COVID in the first place. But if I am conscious of my health, and I have been doing that every year as a preemptive basis, is there a way based on customer consent I can pull out health data? I mean, I know there is a program of health ID and a national health ID as recommended by the PM, and I don't know the progress on that. But if we can make some of these things simpler, and today everything is available in technology through APIs, as long as the customer consents, and I am able to pull data from various sources, I think I can make the process of making sure that the right customer will get a brilliant experience, and all the fraudulent customers will get exited at the time of very, very early, and it will make actually the entire process very, very efficient for life insurance. I think that's my view. So the need of a data warehouse with the way we built it, either separately or we replicate what is already available in the banking industry, because that wealth of data is significantly bigger than the life insurance companies. If you can find a way to pull in and therefore then pull data out, I think it can just solve the problem that you are saying. And what will happen is the good customers will have a brilliant experience, and fraudsters genuinely who should have a bad experience will happen in real time. That's my view, Mr. Kumar.
Thank you, Mr. Kamlesh. I agree with you, because the bad claim is settled, it is impacting actually the good customer, and they are paying the price for that. So there is a need for having a kind of a database where the life insurers can access that data to at the claim stage, but at the end of claim stage, to eliminate this kind of fraudulent claims. Mr. Naveen, the life insurance regulator came into picture in 2000, and after that, number of regulations have been framed to regulate the life insurance industry. What are your views about the regulatory framework in respect of life insurance industry in India? Is the industry over-regulated, or is it a hindrance to the growth of the life insurance segment business, or it is a facilitator?
Thank you, sir. I think any discussion on regulatory framework is a very complex one, and we can discuss over many days or weeks, in fact.
See, of course.
I will try and address this as simply as I can. I think firstly, if you just look at the last 2 years, it has been fantastic to see the regulator's partnership with the industry. And let me take this platform to thank all the seniors in IRDA, each and every person in IRDA for their fantastic collaboration with the industry, which Mr. Ganesh also mentioned. And without repeating everything, I think just the pace of some of the decision making to ease doing business, to ensure continuity of cover of customers, make sure that we are able to sell new policies, I think has been absolutely fantastic. Also, if you look at the longer term view for a minute, if you look at the last 2 decades, Kannan mentioned this in one of the previous industry forums that I was with him at, it's a great statistic for the industry that our sum assured has been growing at 19% over the last 20 years. And I think he was so right in pointing out this statistic that while we can worry about many other metrics, premium and how much of that is single premium versus regular premium, etc., ultimately we are here for protection. And the fact that protection quantum, which is measured through sum assured, has grown at close to 20% over 2 decades consistently, 20% over 20 years, is a fantastic achievement, and kudos to the regulator for enabling the framework and the industry structure to do that. Now, I think if you kind of look at the next decade, some of the questions that will have to be answered as part of the regulatory framework are like this. If you look at where we are after 20 years, I think the industry, private sector, I'm not talking about LIC, sir. LIC has been there for much longer time, but you could say the private sector is now stepping into adulthood, right? We are now, most of us are 20 plus. So childhood is over, teenage is over. Now we are into adulthood right now. And if you look at the fact that many private sector companies are either directly listed or listed via holding companies, LIC, sir, is also looking at listing soon. And that listing itself creates a lot of transparency and focus as far as the companies are concerned. I have had this opportunity to work in a global role in life insurance, and I can say hand on my heart that the proposition we in India offer to consumers is really fantastic. Why do I say that? When you look at VNB margins of companies in India, they are the lowest in Asia, lowest VNB margins. Commissions are regulated, cost structures are regulated. So who's getting the value? The value is obviously going to the consumers. Then we have open architecture in banking, right? Many banks have become open architecture. Brokers are open architecture. For digital and agency, again, it's a level playing field. So increasingly, this is becoming, no market is perfect. No market is perfect. But I think our industry is becoming a highly competitive industry where we can trust competition to do the right thing by the consumer. So I think in that context, there are 3 questions on the regulatory framework which will have to be addressed. One is on the structure of the industry. Second is on the conduct of the industry. And third is on the performance of the industry. Right? I think any industry is defined by these 3 elements. What is its structure? What is its conduct? What is its performance? I think on the structure side, the regulatory framework is very strong, needs to continue, right? There cannot be any let up on that because ultimately this is a business of trust where you are taking in policyholder money. So this aspect has to continue to be closely regulated. Who should be in the industry versus not? Which shareholders are you comfortable with? What balance sheet resiliency you want? I think those have to continue. But maybe a question for the regulator to look at is, in terms of the structure, we have this life, health, general insurance. Right? Do we want this structure to continue, or has time come, for example, to see, do we want life insurance to do more on health? If you look at other Asian markets, I think a lot of the acquisition products of life insurance companies are actually health insurance products, right? Which we today as life insurance companies cannot do. So I think that's one question, maybe on the structure side. On the conduct side, if we agree that we are now into adulthood, and if we agree that there is enough competition out there, then I think maybe there is a reason to look at more principles-based regulation rather than micro-regulation. And what I mean by that is, can we look at what is the promise that consumers are making to the customers, and are they fulfilling that promise or not? And that is very easy to do in some products like protection, very easy to do in some products like guaranteed. Where you typically have problems is in par products. But again, in other countries, regulators have come up with this framework of fulfillment ratio, saying if you promised a certain return to the consumer, have you fulfilled that return or not? I think product filing and approval can become easier, subject to certain guidelines. There can be more flexibility around that. I think agent recruitment and training can become simpler, where there can be more onus on life insurance companies to recruit, train, certify agents. I think expense management can be made simpler within an overall limit rather than multiple limits within that. And I think from a conduct perspective, the point that Kamlesh made, maybe there can be a framework to enable collaboration through industry platforms, which will help in new business underwriting, claim settlement, fraud management, and so on. So I think these are some questions which are not easy to answer. I don't think there's an answer to these like overnight. But I'm saying over the next few years, over the next, as we look at our performance of the industry over the next decade, these questions on conduct will have to be addressed and answered. And we can do it. We have time on our side, and we have the fact that we have a well-performing industry where the regulator has played a fantastic role. So we can kind of be thoughtful about how we answer these questions on conduct. Last, on performance, I think the fact that through the pandemic period, the industry has grown, the sum assured has grown, the fact that claim settlement has got better, the performance of the industry is in a good place. I think the one other aspect which is at the edge of performance and conduct is how do we think about risk-based capital regime? I think that's very important because today, different companies take different types of risks on their book. And how is that risk getting rewarded from a solvency or a capital perspective is again a question that needs to be looked at. How do we want to differentiate companies on this dimension? It's a very difficult problem. Again, I'm not saying these are easy problems, but again, that is an opportunity for us to look at together and see where we end up. So in summary, sir, I would just say we should keep in mind we are a very young industry with the exception of LIC. And therefore, what we have today is a product of the fact that we are a young industry. As we step into adulthood, these questions on structure, conduct, performance, are opportunities and challenges. And I think we'll have to kind of look at all these things. The regulator will have to look at all these things and make changes which enable or which allow us to continue the fantastic growth in protection that we have achieved as an industry together over the last 20 years.
Thank you, Mr. Naveen. Mr. Kannan, I was coming. Yeah, sure. So I was actually raising the same question to you also, sir. I seek your views.
Okay, sir.
Yeah.
No, yeah, I just, I think Naveen has eloquently covered the entire spectrum. I won't repeat what he said, but I will just add a couple of points. That's what I thought. I'll seek permission for that, actually. The first question, I would also agree with Naveen that we should characterize the regulation in the last 20 years post-liberalization. And I must say that in this capacity, I'm here only for 3.5 years now. But I see it one of constructive, development-oriented and responsive regulation so far. So clearly, we have ensured on one side, increase in penetration, as Naveen has mentioned. On the other side, an orderly growth of 20 years of liberalization. I think that has been done phenomenally well. Full credit to the regulators. So that is what the starting point is. I would only say going forward, now that we are reaching the adulthood in terms of private companies, and we are getting to sort of a, the penetration levels, as Mr. Ganesh mentioned, equal to the world average, maybe there is an opportunity to do a regulatory roadmap for the next 2 decades, having gone through 2 decades of liberalization. Naveen mentioned the various aspects. I would just only add that probably this is a time to think about composite licenses. I'm sure Naveen will have wider experience than me, having worked in international domains, and this is not uncommon in international domains, that if the human life and financial security is the fundamental objective of life companies, general companies, health companies, should we not be having a roadmap for composite licenses? The more merrier in terms of the under-penetration, which needs to be addressed. So I would say that that is something maybe regulatory perspective, a roadmap, if not immediately, can be laid out. That will be extremely useful. The second area is where investment side, I would say that much more can be done going forward. I mean, of course, I'm also leveraging on the success of the investments in the last, for probably LIC from 1956 onwards, superbly conducted in the industry. We have gone through several cycles without any injuries. So given that, can these things be opened up? For example, giving an asset class of international investments to our policyholders and so on. And including specifically, I would like to talk about allowing insurance companies to form subsidiaries in the ecosystem area. So through the panel discussion, I'm seeing the partnership as a theme, and Mr. Kumar also mentioned in his remarks about the whole thing is about partnership. And we should accept as an industry that there are players outside of us who have done a phenomenal job of access to the customers, including innovation, where they may be coming from a completely different mindset compared to the incumbents. So how do we partner with them in a structurally viable manner by having a skin in the game, innovating along with them, not reinventing, but innovating along with them. So maybe we should be allowed to integrate smoothly with them by forming subsidiaries so that there's a skin in the game on both sides to the benefit of our policyholders. So one area of this whole composite licensing, second, ecosystem play in a much more skin in the game kind of a manner. And the last part, I agree with Naveen about the capital. I mean, there may be a whole way of relooking at the capital, because for a pass-through industry, if I may say, we are wasting capital by impounding too much of capital. For example, LIC, if I look at deconstruct the business, bulk of the business will be a pass-through business. LIC is not saddled with any huge level of guarantees. Then why should so much of capital be impounded? To be good for LIC, good for everyone, and ultimately capital can be deployed, redeployed rather, into a protection kind of an area which is underserved, so that all of us can actually take more steps in protection area. So I thought these 3 points I should supplement to what Naveen said. I mean, he has of course mentioned all this, but I thought I should supplement it. Thank you, sir. Thank you for the opportunity.
Mr. Kanan, you elaborated very beautifully along with Mr. Naveen. My next question goes to Mr. Kamlesh. Kamlesh, I would like to pose this question to you: whether the life insurance industry need new regulations and or changes in the existing regulations to bring innovation in products as well as in services?
Regulatory question, I think very well addressed by Naveen and Kanan. Like I said, for me, I think any product in which we are interested with customers' money for at least 30-40 years, and there's no other industry like that. I mean, in a banking system, at best you have a 5-year fixed deposit. At best you may have a 20-30-year home loan, where of course the customer is supposed to pay you money and not the other way around. They're completely a different industry, and therefore I think regulation is pretty much deemed necessary. I just wanted to make a point before I answer your question, because I came from a different world and I've been a banker with RBI, and of course I saw the element of accessibility with IRDA being pretty great. That's my experience over the last 2.5 years. And to your point on regulatory changes there, I think what needs to get driven is what is good and right for the customer. Okay, I'll just pick on an example which I like, which Naveen made, to say that if there's a 30-year-old guy and after 10 years at 40, both the guys are different. Today, I don't find a way of differentiating both of them. And I don't know, when we bring the element of wellness, and I'm more engaged in the life of that customer, I should be able to bring in products which are able to differentiate those two people. Because genuinely, like you said, fraudsters should not enjoy the benefit and the good guys should go through faster. Similarly, if you are in the business of health and mortality, both, then I think it's important to think of products from that fashion. Other examples are areas where all our loan products are shifting to, say, some kind of an index, which by and large is a GSEC. And as an industry, we've been talking about saying, can we create a product similar to that, where we can benchmark, people know what they will get based on an index which is like that of a 10-year government security. I mean, those are opportunities that can come in that kind of area. So to me, in the regulatory framework, I think whilst new product movement is very quick and fast, in my last 2.5 years, I have gone back to IRD at least 7-8 times, and I have seen a great, but I think the contours around which some of the products are made, I think can be slightly different. And I think as a regulator, it's important for them to see anything which I'm able to differentiate between two customers on the merits of the health of the customer, I think should be a product chain that we should be find it acceptable. Because finally, I'm saying one is paying more and one is paying less. And if life insurance companies are being able to pass on the benefit for the right life cycle management of that customer, it will also help life insurance companies to actually solve the problem of engagement with the customer. And I mentioned in my previous discussion that, not many people know what life insurance they have bought, is because we are not engaged as much as we need to be. So all the other issues that we talk about, whether short memory, it gets heightened during the pandemic and moves away when the pandemic goes away. If our products are constructed that allow us engagement with the customer during the 10, 15 year, 20 cycle, and they're interesting products like I mentioned just now, I think it could make a big difference to the life insurance industry as a whole.
Thank you, Mr. Kamlesh. I must also say that the regulator has done a phenomenal job. It has been responsive to the needs of the industry, and in future also I believe that it will be responsive and coming out with new regulations facilitating the life insurance industry. Since there is no question, I don't see any question on the screen from any of the audience. So the last is an open question, anybody can answer, whether there is a need for a super regulator in India which will regulate all kind of financial markets as it is happening in some of the geographies. Just an open question, anybody can take it.
So I have a view on that, Mr. Kumar. I don't know whether there's a need as much of a super regulator, as much of a need to make sure if different regulators can, ride on what has been created in different financial services industries, that can make the process of some of the things that we do faster. Like the example that I made to say, if you're going to take time creating IIB on a longer period of time, where say somebody like the banking industry, Sibyl has already worked on that since 2008 and has an experience of 15 years. I think the need for regulators to be different. I mean, I don't have a view. I think they function well at this point of time. But if regulators can, piggyback on what is already done versus wanting to create new all over again, I think that could be, and in critical areas like data and so on and so forth, which can make the life of the manufacturing companies like life insurance or health insurance easier. That's the only point I would like to make in that area.
Any thoughts, Mr. Naveen?
Similar, sir. I think if you go back to the point that we discussed, that ultimately every industry is defined by its structure, conduct, performance. I think some of the questions that we discussed together are more important to address. Now, as those questions on structure, conduct, performance in the regulatory framework are addressed, there will be overlap or boundary opportunities between different regulators, right? And I think there are many different mechanisms of addressing consistency of response from, say, IRDA or RBI or SEBI on those boundary or interface questions, right? So what is allowed in X industry? How is something very different being allowed in Y industry? There are mechanisms of regulatory collaboration. And if you look at Asia itself, there are many examples. There are examples where you have a unified regulator in Asian markets. There are examples where you have different regulators, right? So I don't think the answer is so easy or straightforward. But I think as long as those boundary interfaces can be addressed through regulatory collaboration, that is fundamentally more important. And I also agree with the point that Kamlesh is making, that I think good ideas, good regulatory enablement, which has worked in one sector. So what has worked in life insurance, how can that be taken in mutual fund and vice versa? Or what has worked in banking, how can it be brought into life insurance? If that can be accelerated, then I think we've solved the problem without necessarily tinkering with the overall framework per se. So I would say solution and consistent solution across industries is more important rather than necessarily having one super regulator. That's at least my limited personal view.
So thank you very much, all the panelists, Mr. Kannan, Mr. Naveen, and Mr. Kamlesh. The time is up. It was a wonderful discussion, and I think all the audience have been benefited by the views expressed by all the eminent panelists. We have addressed almost all the areas related to the life insurance sector. I personally thank all the panelists for joining today for this wonderful panel discussion. Thank you very much.
Thank you.
Thank you.
Thank you. Thank you. It's a pleasure to be here.
Discussion. It's been a great discussion. I enjoyed, though I don't know much about the sector, I think I had a lot of takeaways.
Yeah, thank you so much, sirs, for such valuable insights and captivating discussion. We are sure that the attendees, they have truly benefited from today's discussion. Though we could see some questions in the Q&A section, and we truly thank attendees for putting those questions up. But because of paucity of time, I'm sure that some of the questions have already been answered during the course of the discussion. But due to paucity of time, maybe we won't be able to take up any further, and we will get back to them via email a little later. So ladies and gentlemen, we will now take a quick break and begin with the second session at 12:15 p.m. So please stay connected to hear insightful presentations from eminent experts. Thank you so much.
Welcome back, ladies and gentlemen. Continuing the interesting conversation that we have been having since morning, we are now going to have the second panel discussion on the topic leveraging digital technology. For this round, the moderator is Mr. Joydeep Roy, Global Health Insurance Leader and India Insurance Practice Leader Partner at PwC. And in the panel, we have Mr. Anand Pejawar, Deputy Managing Director, SBI General Insurance Company Limited, Mr. Dheeraj Aneja, Senior Vice President, FinTech and Payments Group, Flipkart, Mr. Pratap Tambe, Head of BFSI, Blockchain Consulting, UK and Europe at TCS, and Mr. Suhail Ghai, Head IT, Max Life Insurance Company Limited. I now request the moderator, Mr. Joydeep Roy, to kindly commence the discussion.
Thank you and good afternoon to everybody. Good afternoon, sir, Mr. Srinivasan. It's always an immense privilege and pleasure to come and speak at the City Deshmukh seminar. This name means everything to the insurance industry in India, and the start of the organized industry beyond the cluster and the whole mass of the companies that used to exist before 1956. I think that's the history speaks for itself. This seminar has always brought out new values, new visions, as well as new talent, and with the papers which have been always recognized. And National Insurance Academy has been at the helm of it all. So thank you for inviting us, me, and all of us here, and a fantastic panel. Welcome to Anand, Pratap, and Dheeraj. So digital is something that we have always been talking about, right? So from the time the first commercial internet browser came on, which is almost 30 years back, digital has been a buzzword. It has meant different things at different times. It was called digital even with the punch card era when things were being automated. But real digital really came into being with the internet coming on, which really fueled the entire communication between systems, between people, and enabled businesses. Well, during the pandemic, which we cannot avoid speaking about, we have seen an acceleration of everything. And I think now the new word probably is virtual. In this conference itself, we are having virtual, and it's probably a testament to the fact that digital is probably morphing into virtual everything, isn't it? So it is enabling people to work remotely. It is enabling upgrades of the entire methods of doing things, new supply chain, the cloud really becoming all pervasive, data structures are being harmonized, CRM has a new meaning nowadays, HR, the way HR is now being thought about how to engage employees as well as in really make sure that every processes are simple and across the organization. Everything and everywhere we see an all pervasive digital and virtual presence. So is it really something that needs to be talked about first of all, or should we talk about the impact of this? And since the theme is to look at the next decade, which is, or rather this decade, in the next 10 years, I would like all of us to really envision the future. As they say that the future is what we all will make it, right? It doesn't happen. It has to be made, and therefore the vision of the industry leaders like yourselves it is very important to guide actions of regulators, actions of government, actions of the industry, and of course the entire the consumer set. Sohail, welcome. So that's where we are at. So if we take that particular angle, I would like to all of you to speak with that kind of your vision and your understanding. So I would start off without much ado. Let me start off with Anand. Anand, who has been not a stranger to this conference or any other conference for 15 years, right? Last 15 years, and has been a very venerated and speaker. Well, every word is gold dust, Anand. It has always been. So therefore, what I'd like you to probably tell us is how is digital bridging, or how is digital, virtual, whatever it is, bridging, or is it bridging at all, the trust deficit between the entities, like the regulator to company, company to customer, but mainly probably customer, because the customer's trust deficit with insurer is a worldwide phenomenon. So how do you see how can digital be used in the next decade to keep bridging the gap, the trust deficit with the customers? I think there's no better place to start off than the customer. So let's do that. Over to you.
Thanks, Jaideep. First of all, thanks, Srinivasan sir, for inviting me for this conference. Though I've moved out of life insurance and now into general insurance for just about a month. Yes, Jaideep, I totally agree with you when you mentioned about the word of digital being used. If you probably go back to certain conferences where we have attended together, we had to explain what digital means at one point of time, even at the beginning of the last decade. People somehow felt that transferring the physical method of doing work into a computerized system was digital. And then when we started talking about end-to-end processes, how do you reduce the things and all, then that's where people really looked at what is digitization in that true sense and how things can be looked at. Coming specifically to life insurance, I think digital has completely, or rather technology has completely changed the face of this segment of insurance. And why I say that is normally we all know change is something which is the only thing which is constant. And if you don't change, environment will force you to change. And that's exactly what happened in March 2020, when suddenly we had to go from physical offices to work from homes and remote locations and all that. And unheard of things could be done in this manner. For example, all of us know that for so many years, audits were happening physical. Rather, closing was happening physical. And in 2020, all the companies, I think, did closing on remote basis. So 20th, 21st, everything was locked down. And then every company said, we're going to have issues. How do we meet our targets? Major business comes from that portion. How do we service our customers? And then we did a successful closing. The industry went and did the audits offline, remote basis, then went and did the board meetings on remote basis. So whole change of thing which was looked at, and which I think large credit of that goes to the technology part of it. Piece of it was looked at. Now coming to your specific question about the interlink between insurance companies and the customer, and when I look at a customer, I will look at it from two angles, especially from the life insurance industry. The first customer for me is an internal customer, which is my distributor. Because if you look at it, even he is a he is a customer for every life insurance company, and the final is the end customer to whom the product is being marketed, sold, and serviced. Now, this technology and digital thing, which the huge transformation which happened in the last 2 years specifically, has completely changed the face of the entire process, right from marketing or proposal stage or selling of a product right up to the servicing of the product. I remember when I was in SBI Life and heading operations IT international business, we had this huge thing of trying to see how I can issue paperless, penless policies. And that was a huge thing because physical contact was not possible. People were not allowed to move. How would you collect? So how do you transform the 16-page proposal form into a mobile application, a simple mobile application which the internal customer, who's a distributor, be it a banking employee, be it a retail type agent, or be it a corporate agent or a broker who does business for you, can start sourcing. And from that stage, everything had to be contactless. everything had to be based on technology, everything had to be based on digital platforms, which is there. And I think the industry has done fantastically well to go through this path of a digital transformation, right from proposal stage right up to the claims payout stage. And we'll probably go into specifics further when we discuss these things. But overall, I think from the distributor's point of view, I think insurance companies have tied it up very well. From the end customer point of view, it has helped the customer in a big way, because most of the companies put in digital assets which could be used by the customer to exactly find out what product he has bought. Because always we found a huge gap between what the distributor would communicate about a product to a end customer to what actually he gets in a form of a policy bond. And then there was this huge debate of, you know, this was not told to me and this was not communicated to us openly. But today, if you see the entire features, advantages, benefits, charges, everything is communicated on a digital platform. You have something called, most of the companies have put in different varieties of or variants of PIWC, or pre-issuance welcome calls or post-issuance verification calls, or whatever you may call them in whatever name. And that also gives a complete picture to the customer of what has he actually bought. Because I think insurance is the only product where you pay your money today, but you might not be there to see the promises made on that particular product. Because if it's a term plan, only your nominee will get the money. Otherwise, you don't know what happens. So this complete journey of moving from a physical mode to a completely digitized mode, I think is a huge benefit that we have seen in the last 2-3 years that the pandemic has forced every organization to do, from face-to-face selling to digital sales. And when I say digital sales, not only on online sales, but it is also assisted sales through the distributor, who's completing the journey on his mobile or maybe his laptop or his iPad, whichever device you call it. Going one step forward, how did they digitize the underwriting process, which was, in life insurance, supposed to be one of the most toughest part of it. So I'm not looking at small policies which get underwritten immediately, but from a customer angle, how do large policies also get underwritten without paper? So paperless policies. And last but not the least is how do the servicing and renewal happen? So this entire piece is now, I think, perfectly tied up on digital platforms. So my view is that more and more you will find virtual offices being opened up by companies rather than brick and mortar offices, which will help companies to penetrate deeper into the semi-urban and rural areas where we still need to penetrate. I think that's my personal view as far as the insurance sector is concerned, and how this technology revolution has completely changed the buying paradigm and the selling paradigm for the customer of that's, I think, I would like to put this in this particular format.
Thanks, Arun. And in fact, the last point that you made is something which we can probably come back and discuss. The whole idea of presence. And since we're talking digital and virtual, question of branch versus presence, I think we should spend some time on it. We'll come back to you on that. It'll be a very interesting one for people. So let me move to Dheeraj. So Dheeraj, there has been, from when we used to be kids and studying chemistry, we used to be hear of something called a catalyst, right? A catalyst which comes and stirs everything and sort of increases the rate of reaction, isn't it? Like, rust formation, everything. In fact, a lot of people who make omelets, who are cooks who make omelets and really stir the eggs, the real experienced cooks do it on a copper vessel, because then the foam is larger because of cone albumin which gets formed. So catalysts have a place in every phase of life. Everything that we do, anything that where the reaction is happening and there's something which is being formed or transformed. So this entire transformation towards digital modes, well, there is this whole plethora of fintechs which have come in, and you've been one of the earliest, right? I mean, pretty much early in the curve, where you started the whole, digitally choosing things, looking at things and buying things. And of course, The innovation which really worked was probably the non-digital one for scale, which was cash on delivery. But end of the day, the digital revolution has helped, and fintechs have helped, probably have helped. So how do you think this has worked out? How do you think in the next 10 years, fintechs are going to play a role in really shaking up, energizing, and adding value to the entire digital revolution of the industry?
Sure. Joy, firstly, thank you so much for making me part of this panel. It's an absolute pleasure. With respect to your question around how do fintechs create more sort of like, as you pointed out in your question itself, that how do fintechs become a catalyst? I think there are multiple ways to sort of answer that question. One is more, and I would sort of break it down from a couple of different viewpoints. One is the core product development itself. What is it different that fintechs can bring to the table? Two is obviously if you've seen it, we've already started seeing it on the lending side, the entire operations piece of it. We've seen it on the payment side where, payments has become so much bigger outside of the banks as a result of UPI. And then more effectively from a distribution standpoint, platforms like ours, which reach hundreds of millions of customers all the way from tier 1 to tier 4. I think these are some of the big areas where fintechs will probably be the catalyst over the next decade. And from an adoption of technology, I think is the other dimension. So if there's one dimension, which is distribution and customer, the other dimension being adoption of technologies. I think that's where not being encumbered by any sort of legacy infrastructure allows a fintech to rapidly innovate and combine a multitude of technologies. See, what's happening is that you have a technology which is, let's say, digital or a platform that's available on the KYC side. You have a technology which is in a different state, which is possibly blockchain, as one of our fellow panelists will speak about. You have technology in the form of robotic process automation. You have no-code, low-code technologies. You have AI, ML. Now, all of these technologies fundamentally are at very different stages, right? Now, innovation on this dimension and digital in this dimension will be more iterative in nature and will disrupt, in my opinion, different parts of the value chain for any industry, not just for insurance. One could say that, the ability to take all the data and crunch it at a rapid speed may come a little bit sooner. Blockchain in claims processing or onboarding may come a little bit later. RPA could be faster. No-code technologies from a delivery of experience could be faster. And I think that's where fintechs, if you combine this dimension, the fact that we are able to sort of look at various sets of technologies and start to work upon them in some iterative fashion, because no individual technology will fundamentally reshape the landscape. I think there was a point in time where individual technologies were big enough to reshape landscape, and we saw that with the internet itself. But I think the next decade is how do you sort of actually start to bring all of these different technologies and platforms and experiences that are emerging across the board, whether it's Internet of Things, whether it's AI, ML, whether it's RPA, and start to redefine the operating model itself, right? In how you onboard a customer, to the point around claims, to the point around fraud, to the point around underwriting. What does life insurance mean in the context of a changing lifestyle of the customer itself, where customers are moving in a certain direction, and hence what are those data variables that we can consume and sort of store it in a manner which can be easily processed. I think for me, that is the fundamental role that I feel that a fintech company can sort of bring to the table in close partnership, obviously with the large life insurance companies, where an amalgamation of technology on one side and proven history and experience on the other side could sort of co-create something which is, fundamentally disruptive over the course of next decade. In isolation, it will not occur. It could also occur that fintechs, and I think we've already started seeing that fintechs, where they were struggling if they were only playing at the customer end or they were playing only on the consumer end, have now started vertically integrating and going into the path of actually being an insurance company themselves and manufacturing the product to build an end-to-end value chain and scaling it up on the back of the large platforms such as ours. To me, that is sort of the road forward to say, how do you co-create and ensure that all of these technologies are being adopted at scale in the future? They will come at different points of time, and hence a very strong iterative approach in investing and working through these technologies, because it's not going to be easy. The business case for many of these will not be very simple in that sense. But that's where I see the biggest opportunity and the biggest disruption coming through the fintech ecosystem over the next decade in insurance, or in general, I would argue otherwise as well.
Thanks, Dheeraj. Yeah, very interesting. The interplay is something which is definitely the stuff of which can really transform. I mean, it is not well nigh impossible nowadays for just individual one technology to come and shake it up. It may happen. We may all be eating our words. Who knows in the next decade, this next 10 years. But it is looking more likely, no doubt, that interplays will create value for organizations also in ways that we have not seen earlier. And you raised another important point about fintechs being self-sufficient and having insurance companies of their own. Well, that's another thing I'd like to dwell on when I come back to you later on, how that can really, what that can mean for penetration of insurance in the country, and whether one has to be just always be like a universal bank and a small finance bank and a payment bank. Can there be different categories? So we'll hold on to the thought and come back to you on that. So Pratap, over to you now. And I think we'll come back to the point of trust, because we cannot, I think we cannot just beat it dry enough, because the trust issue has been seen in this industry more than any other industry. And it is trust which is, or the lack of it, which really has put in place so many different processes, so many different mechanisms which has been done, and people spend a whole lot of money for that, right from fraud analytics systems to looking at trainings and miscommunication, mis-selling, etc. Right from policy delivery and non-delivery issues forever. And then there is the issue of claims, where so many different elements have to be seen, right from the cause of death certificate, attending physician certificate, to earlier, pre-medical, pre-policy medical. So there are so many different elements which come in, that it seems that this industry is suffering from, a kind of a lack of transparency. Do you think technologies like blockchain, which you are specializing in, and whatever else, do you think some fundamental technological changes like that can bring that in and help dealing with multiple people with the correct authorities real time, and completely remove the need for any kind of double, triple, quadruple checks and still lingering lack of trust?
Thanks for to NI for inviting me to this. Talking about trust, trust basically is based on past experience, and there are situations where the customer may depend on the provider for various things and does not have control, does not have a lever. There may be a contract in place, but the contract performance is not something that can be guaranteed. So trust is built out of a sequence of such dependency situations where the other party, where the provider, for example, has fulfilled whatever commitment was there. So it is through a sequence of such commitments that trust gets built. And today, many times customers do not experience that, and especially in insurance, where there are various the expectations that the customer has does not always get fulfilled, and the customer has to take 3 extra steps beyond what he had originally anticipated, or where what he expected, because of which basically this trust factor decreases. Now, typically, so that's basically, that's my definition of trust. Now, talking about the situation that you spoke about, whether it is the placement kind of placement of the insurance process or the post-placement process, there are various parties, there are, as Dheeraj spoke about, there are various technologies, and different technologies have different roles, but I would like to shift the focus to the ecosystem view. There are various parties independent of each other, and all of these parties need to be strung together to enable efficient operations. And today's technologies do not enable what I see is what you see. The customer says my policy is still active, and the provider says your policy is lapsed. The single version of truth doesn't easily exist. That is one of the fundamental basis of trust. That if everybody believes that there is a single version of truth, there will be trust, right? So that's the thing. Now, in terms of blockchain is a technology which basically enables what I see is what you see, right? And processes which use what I see is what you see will be much more efficient than processes where I have to convince you that what I see is what you should be seeing, and then arguing and sending documents and exchanging to make sure that what you see is what I see, right? So that's what adds friction to processes, and blockchain basically solves that problem. Just to and so definitely the processes of where we have all the medical checks and various surveyor and other checks that need to be involved in the underwriting phase definitely can be automated using blockchain. Onboarding customers to life insurance websites, systems, and policies, currently happens in a hybrid kind of mode, and it's a slightly complex process. And but what self-sovereign identities, which is one of the applications of blockchain, can enable it can enable a completely digital process. It is possible also to personalize the life insurance customer experience, including underwriting and service delivered by websites and the systems without storing PII. This is one of very critical. You don't have to store PII in order to personalize experience. So this is something that blockchain enables, and we can go into details about that. Then the simple setting up of nominees, which blockchain enables the ability. Self-sovereign identities have nominees. You can set up nominees, and then there can be blockchain-based smart contracts which can manage basically the setting of nominees, and then the transfer of control to a nominee. So, you can set up a nominee through granting digital power of attorney. You can use obituaries to detect policies, detect matching policies and notify nominees. You can enable the nominees to gain control of smart contracts through digital power of attorney. And then you can enable the nominees to participate in digital claims processes. You can enable digital claims process between the death claims ecosystem parties, hospital, corporations, and funeral homes and crematoriums, etc. There are blockchain can enable basically gig economy platforms like Uber, or others, or platforms like that, to potentially become channels for life insurance companies to provide, to provide life insurance policies to gig workers. So the thing is that blockchain is still, I think, at an early stage, but some of these things are becoming real. For example, there are insurers who are beginning to use cryptocurrencies to pay to accept premiums and pay claims, and then basically there are people who are already using blockchain for facultative and treaty reinsurance, including life. Life is also basically one of the hotly discussed ones. And talking about pensions, you can have employee and employer and employee onboarding to pensions. You can do finding and claiming of lost pensions using blockchain. You can have pension dashboards across multiple parties. There is Legal and General in the UK has put into production a pensions risk transfer use case. So those kind of use cases are possible. So there are lots of use cases across life and pensions, and which instrument this whole ecosystem. So that's what I would.
Fantastic, Pratap. I think you covered a lot of ground, actually. In fact, one of the use cases that immediately springs to mind from what you said would be the tens of thousands of crores lying unclaimed in life insurance in India. So social benefit can be accelerated. And you're right, finding people through seemingly disconnected modes, but those are actually finally those are tokens, right? So finally those are tokens hanging around and floating somewhere. And as we keep living and utilizing such technologies in whatever we do, we will start leaving a trail. We'll start leaving a trail of what we are, where we are, which can definitely obviate the need for verifications, too many verifications, isn't it? Look at the entire KYC process, look at the entire, all of these, which all stems out of the fact that we do not know, or it's not easy to verify, and then we go into a longer process. So I think this is definitely going to be one of the transformative things, and we can dwell upon other things on that. Let me come to Suhail at this point. Suhail, you have been in the forefront of the hard technologies for a long time, and after that, of course, now the distinction between the hard technologies and the sort of surrounds, the distinction is becoming very thin, isn't it? There are overlaps, and but we have been talking a lot about digital and virtual and the things that are being seen, the trends that are being seen. So, if I would I request you to spend some time and tell us about what are the basic shifts you're seeing, even in digital hard technology? For example, cloud, and what would it mean, the cloud shifts, at the acceleration of that? Well, what would it mean for, let's say, the players? Software as a service, emerging in most cases nowadays, instead of monolithic large implementations. Then, of course, the surrounds which are coming in, like data privacy, which will obviously come in everything that we do in digital more and more, as we go. We heard from Pratap also about crypto becoming prevalent, and I mean, it's a matter of time. So what do you think? How do you think these shifts and other shifts, whatever you see as a basic shifts in digital technology, are going to shape the way we are going to see digital and virtual in the next decade?
Thanks, Joydeep. Look, I think as Anand and Dheeraj and Pratap spoke before me, fundamentally in insurance industry, what are you trying to do with digital? One, you want to make sure that your customers can discover products, the right products for them at their own pace and where they want. Second, how can you onboard customers with least amount of friction and give an instant issuance? As this is the only industry where we take money in the front, and sometimes we give the money back to the customer saying that we can't issue in policy. The third is about how can you service the customer and know what a customer wants before he wants it, or when he calls you, you know why he's calling you. And last, how do you make the whole thing become so efficient in terms of operations that you give the value back to the customer in terms of your least cost of operations? Now, when you look at this whole four large players, right? One, I think, is the whole coming alive of the online business. In the online business, we see two things. One, with the mobile penetration going up and online content being created. A lot of people are doing what you call research online and buy offline. So even if people are buying from offline, they're researching online. The ability to go to marketplaces and web aggregators and compare policies. And I think that's become very real, which will help customers decide the risk policy. Second big thing is about, I think we spoke about, is whole this API economy. More and more you're realizing that a lot of these decisions are not taken in isolation. For a customer, it's a financial decision, it's a part of the portfolio. So how can you be sold along with the bank product? How can be sold along with the mutual fund? And I think I see general insurance doing they're a little ahead in this curve. But this is another big issue where the API economy comes in whole and so you can be consumed as part of your larger financial conversations and journeys and not as a standalone product. Some of the agents do a very good job of they pitch it to the customers. Third, I think, is all about, we spoke about, Anand said, creating trust. Today in the physical world, a trust meant that you knew from somewhere the seller or an agent, and that created trust. Today, when you are virtual, you need to create this trust virtually. We have seen good agents actually using microsites today, using Facebook, Workplace, many places, right? LinkedIn, create that identity of their own. How digital health creates small CRM solutions for these people to catch the leads and follow with them. And we are seeing this physical industry becoming virtual. I think while as we shift from prospecting, I think to onboarding, this is, I think, the biggest change has happened in the insurance in the industry. Where tech is thinking. If you look at the entire ecosystem, and we spoke about whether it is KYC validation, whether it is banks sharing your EBCC or electronic banker certificate, which means you don't need to do a further KYC, or the entire ecosystem of of financial bureaus, of insurance bureaus like IIB, it is basically neglecting any need to really ask for any documents. So I think most of the insurance for 70-80% of their policies do not require any document. The next big hurdle where technology is coming into play is this whole area about medical. How can you take that friction out? And therefore, where we see while a lot of the integration of the new booking apps, the whole medical ecosystem, how can you instantly book your medical appointments? How can you get real-time results? Secondly, how can even you give a customer more than this? Because you may actually only test the customer for his healthiness, but can you give something back to giving him his medical profile so that he can also add value to him? The last one is also about how do you someday eliminate, and we are seeing this technology, and many of us are currently working through this. How can you eliminate some of the invasive testing through better imaging? I think we are already seeing imaging technology in many advanced markets where it has gone to a point that looking at the retina in the eye or looking at some other biomarkers through a picture, you're able to predict the person's likelihood of getting a disease or his health. And I think that is also a major, and therefore this is where the technology really comes into the front force. I think as we move backwards, we lived in this world where the policies used to run in batch modes, legacy systems used to take days to issue in policy. I think today, as the technology is becoming better, as cloud is coming in, as a lot of our components are becoming plug and play, and you said SaaS-based solutions with this whole ecosystem, one, you're able to integrate many things upfront. Today, we are able to run your AI models at the time of proposal form filling, so that your regulatory checks, your existing customer checks, your persistency checks, all are upfront. And therefore, the moment a person says the proposal, you can issue policy in a matter of minutes. Now, this is what you call a consumer grade experience, which a customer is coming to you after working in Amazon or any other fintech, where he's getting a immediate gratification. And I think that's another big area where technology is playing part. And then also come the kind of communication. It is no longer while you may have policy and regulatory packs in terms of policy packs, it is also how you're communicating. Today with interactive videos, you're trying to explain to a customer his policy, his customized video for his policy, so that he can understand it easily. And that is what we call simplifying our complex product. And I think those, again, technology plays a very big role. The third area where, is how do you service customer better? Now, obviously, this is an industry, life insurance, where you have less touch points as compared to a general insurance or a bank. Therefore, one, how do you, I think most of the companies today are trying to build ecosystems, integrating health and wellness platforms with them. And this digital ecosystem is available. And therefore, how do you engage your customers? How do you know more about the customers? Then linking this platform to a virtual banking kind of a virtual relationship manager kind of a solution, so that somebody knows what's happening in your life. So as we know your customer better, our ability to help him take a right decision for his life becomes very important, because insurance is something where the life changes decide what your need is. It's not a constant need. And I think there also we are seeing in servicing, we are today seeing AI coming in form of intent prediction. When a customer is calling you, if you're speaking to a bot, at what time there is a real-time handover from a bot to a human being. When you are on a chat box and you don't get an answer and you hear an answer again, can I seamlessly transfer you to somebody who can help you this? Similarly, if you're on a screen and you're hovering for more than 30 seconds, can somebody interact? Can a bot say, can I help you? Can a physical somebody can guide you through your journey? And I think those putting in the human and the technology concept together, I think that's very important. Also, when it comes to servicing, I think thanks to use of a basic technology like RPAs, today 40 to 50% of most of the companies, the complex transactions are also becoming straight through processing, instant gratification. And I think this is where the insurance company to work a lot more. How do you get almost to 80-90%? Instant gratification where your all backend systems are lit. Now, as I talk to you about all this, underlying technologies remain very common. One, cloud is seeming a very different thing. And it's not just about infrastructure as a cloud as infrastructure. It is ability of all those services, ability to integrate I think that is where it's making a big difference. Second is your launch time of your products. While regulatory only allows you to launch X amount of products, but how can you launch more stories? How can you launch more combinations? The pricing is becoming far more dynamic in today's world. It is no longer, as the risks keep on changing, especially in the COVID world, and we see how reinsurance are working this through. How can you make much real-time decisions? You can change your products, launch in a matter of minutes, and days, and not months and weeks, which we used to do it. And I think finally, a lot is about analytics. How can you mine the information today? A customer, who goes through, while the PI obviously data is very secure, and you obviously need customers, consent before you use the data. But for existing customers, how can you mine this? How can you work models on, say, on your bank partners' data, and without getting the PI data, how can you create pre-approved offers for the right set of people? And I think that is another big area which will keep on working through. So between analytics, cloud, and I think Dheeraj spoke about blockchain, I won't repeat it. And I think these are 3 or 4 major technologies which are impacting us. Lastly, I think one point which is an area which I think all of us are learning through is how to use technology to make our own sales force more productive. So whether it is recruiting digitally, whether it is onboarding and building capability digitally through bite-sized learning, training, and even managing large sales teams. And I think and also you're managing activity management, whether you're integrating location and analytics inside it, whether you are making 2 people meet each other through using a simple QR code. How are you enabling and tracking the performance, and therefore helping your sales to become more productive? So therefore I see an end-to-end view of technology, and I think this is a very interesting time for us to see in the next few years. How can we use this and leverage and grow the industry and give the right thing to the customer?
Fantastic, Sohail. I think you've sort of covered so much ground that it's each of those can be actually topics of one whole day's discussion of various aspects. Definitely. So, and I'm going to pick up 2 things out of there to come back to you. One is you talked about the fact that things like the integration of services and hyper-personalization, the personalized mode. And I'm going to come back to you with another, point towards that. But you're giving me a fantastic segue to move to Anand. You finished with distribution, and distribution and presence is what I wanted to get back to Anand on. So Anand, so a very long time ago, right? Almost 2 decades back, you and I were trying to set up offices and distribution, and those were, completely different paradigm days. Though it felt new. But if we look back, like that was like a traditional mode. So from companies celebrating when they opened their 100th branch to 500th branch, right? Even thousands and 1500th branch, we remember those days, which signified at that time expansion. It signified coming close to the customer. It signified kind of sensitivity towards services and products being reaching nook and corner of the country. But that's probably in 2022 no longer relevant. It ceased to be relevant 10 years back, and then we have seen companies shrink back, but the business has grown. So as we have moved through this evolution, do you see evolution or revolution in the way people manage the presence? Because penetration is still a very important issue. It is hanging over us. And till India's penetration level of insurance, and I am personally not one for recognizing the measure, which is the percent of GDP, because it's the premium rate is risk based, so it doesn't matter what the premium is. It's coverage. So, but as long as we cover, or the other way of saying it would be till the industry covers a substantial portion of the country, the respect that this industry as a socially relevant one that it deserves is not going to come. We know that. We've been through so many different conversations on this. So your vision on presence, remote distribution, and how do you think that's going to evolve? How is digital distribution going to evolve? How is agency distribution going to evolve? So maybe some thoughts.
Yes, Jaideep, I totally agree with you. Now, I think ever since 2008, I think both of us were in the distribution line in 2008, and we found companies closing down offices because of the international that we had. And then we had these the likes of Airbnb and my friend Dheeraj, Flipkart, Amazon, everybody coming in the country and trying to penetrate the rural of the rural most areas and people doing it. Now, this idea brought out to my knowledge that why can't you have a virtual office? Is there still a requirement of a brick and mortar office to run insurance companies? For two reasons. Now, I see a huge, maybe it's just started, but I will reply your question in 2 or 3 different ways. One is that let's analyze the buying psychology of a person today, and especially in the life insurance segment. Whenever I this, the first thing that comes to my mind is the product. Okay, if you go back to even maybe 10 years back, all of us used to sell long-term products, whole life policy. You know, IRDA came out with earlier we had a ULIP with 1 year lock-in, then 3 year lock-in, then 5 year lock-in, and all that stuff which was happening. Today, what has happened? Our friends Flipkart, Amazon have all asked us and shrunk the product to a sachet. You know, I always give an example of shampoo. When both of us were in school, Joydeep, you will agree, our shampoo bottles were made of glass, huge, big ones. Then probably when we reached college or started working, it came out in plastic things. And today you have those small sachets which people carry while they travel. Now people want insurance, and specifically life insurance, in the sachet format. Now if I have to give a life insurance product in a sachet format, does it make sense for me to have a brick and mortar office? Does it make sense for me to have a distribution model, which is the traditional distribution model of an agency where you have life agents and then you have development officers, whatever name you give them, and then you have branch managers and supervisors, whole lot of pyramid which grows with that and which has got a cost involved in it. Now, has this model really helped us to penetrate in the last 20 years the way we need to penetrate? I personally feel yes to a certain extent, but no to a large extent, because every company who wanted to get into distribution first attacked the 20 major cities, metro and urban sector, then they went into semi-urbans, and now people are thinking of going into rural and getting it there. Okay, the next alternative was you catch a distributor who has got presence in that area. It could be a bank, it could be a regional rural bank, it could be common service center, CSC set up by government. Post, which is supposed to be one of the best networks that we have still not been in a position to penetrate the rural market as far as insurance is concerned. So can this virtual office really make it possible? I'm of the firm belief and opinion that yes, this is possible for 2 or 3 reasons. Number one, if any company is in a position to come up with a wonderful model of a virtual office, even a unit manager sitting in his own house can run an office. Okay, a life advisor, whichever name you call him, from his house can run an office, because today technology has given you that supervisory control that you can literally put on things and then try. For example, if I want to know whether this particular life advisor or your sales guys has actually gone to that location or not, today all the what Sohail mentioned about tracking of activity is based on GPS. So I know that this guy has actually gone there, because his GPS latitude, longitude tells me that this person is actually was present at that particular location. Last 2 years, what has happened is people have started or have now learned how to sell on remote basis. So there's no necessity of doing a physical face-to-face. Now, it could be a virtual face-to-face, which is possible. For that, I don't need a brick and mortar office. So I can have a virtual office which can take care of everything. And with this, if I can leverage technology for an end-to-end digital platform, right from sourcing to issuance of policy to servicing to claim settlement, I don't see any reason why we should have a physical office in place. The second reason why I found this was possible is, and I always give this example of a technological integration, with various distributors, because we're talking of distributors. So I'll also talk a little bit about bank assurance, which both of us have worked very much into this particular segment to develop it. So the best example what I give for a digital platform is YONO, SBI YONO. Okay, you only need one. And if you look at it, you actually only need one. It's a banking platform. They have integrated life, non-life, mutual fund, cards, They've integrated your shopping, like Flipkart is there on YONO. Amazon is there on YONO. So apart from this, there are a whole lot of services which you can avail from this particular platform. Now the challenge was, can I sell insurance product at 3 clicks? Because again, these technological disruptors who entered the market have also, to a large extent, changed the buying perception of the customer. Now customer doesn't want to go into so many details, fill up the details, 20 pages, 15 pages, so many fields, and no. He says, if I can buy XYZ from Flipkart or Amazon on 3 clicks, I need to buy the same 3 clicks for an insurance product. And that's where through technology, we could actually develop a product where a customer can buy exactly on 3 clicks. No data to be entered at all. The data completely gets auto-populated through the API technology integration that has happened. Now, this platform, if it can help you to sell a term product, a pure term product with 3 clicks, I think any product can be sold on this particular platform. And if I can sell that kind of a thing, then technology has been a solid enabler for, I think, every insurance company to take it forward. Just to give you a recent example, we launched the combo between life and non-life. Now, just imagine if the seller is a common seller, but he sells one product which is a life product and another product which is a non-life product, and both of them have come together, the data flow has to be seamless between not just one entity, but with both the entities to ensure that the customer gets the product way he wants, the way it has been designed, and also gets the servicing of that. Again, keep one thing in mind. The life product is a long-term product. A non-life product is a 1-year renewable product. So the complexities of both these products are different, but through technology, we could bring this together on a single thing, and a same distributor who is a common distributor between life and non-life can download this and sell this product to the customer. Now, this exactly gave me the idea of why can't you have virtual offices? I don't need anything. I just need a laptop with me and the connectivity. Now, every guy, if you look even from the staff, as of today, 50% of all the offices are working from home. They're all connected either through VPN or VDI, whatever terminology you may call. It's fully secure. Okay, there are reasons where people can hit it if you're not careful about it. But today, people are also aware how they should use this technology for their own benefit. So if we can make use of all these things which are currently available in the ecosystem and integrate it in a perfect manner, which gives you the end result, which is simplicity, ease of operations, and at the same time making you work from your house, I think it's the best virtual office concept that we can look at doing it. And I personally feel 5 years down the line, you will see a lot of virtual offices companies would probably be putting out with.
Very valuable, Anand. And in fact, this will also probably solve another problem of getting talent from tier 2, tier 3 towns, and not necessarily creating the pressure on the already burgeoning pressure on our so-called urban centers, because urbanization in India has not meant urban development in other cities, but it meant a migration to urban centers, which have been a problem, right? It's like a kind of a brain drain locally, which also creates an issue. So yep, great. So we are now, we've got to speed up a little. So Dheeraj, coming to you with the point that I had talked about, sort of taking off from Anand's point also. So do you think all life insurance companies, in all that has been said so far, with all these technologies, the change of culture and customer expectation, do you think all life insurance companies need to be like a universal life insurance company, giving all kinds of products, all kinds of investments and options? Or do you think there is scope for specialized ones, which could be captives, which could be attachment companies, which could go into certain areas? Like, for example, I take your company, for example, you have massive customers, but probably your interaction with your customers is not a 4 times 1 hour consultation, right? But then you have your own method, you have your own trust, I'll say, in those whatever 5 minutes that you can interact. So do you think there is a scope for such life insurance companies and role that they can play for expansion and coverage?
It's a little bit of a hard question to answer, Joy, to be honest. I mean, I think the analogy obviously in some way comes from the specialized banking world, right? Where you
Yes.
have payment banks and housing finance and small banks, right? I think in the context of insurance also, there is a degree of specialization between health and general and life. Now, within life, whether there is a further subdivision of creating further specialization based on products.
Could be based on product, could be based on local locality, could be based on a particular method of selling, which means that customer expectations will be different. But will that spread it all over? I mean, it's not just you. I think
And I do think that there is a degree of specialization that's beginning to occur already, but it's more horizontal in nature rather, and it's playing on the more on the ticket size at this point of time to say that, can we be a company which is issuing insurance worth, let's say, to penetrate the next 200 million by offering products which are sub 5,000 rupees. I mean, I'm just making this up. Now that could be health, that could be two-wheeler, that could be life. Now, if I was to take that analogy and say, within life, could there be a company purely built around a variety of sort of investment cases or just term or a ticket size? It's possible. Are we there yet? I think purely taking a leaf from the earlier conversation that in terms of penetration, we're still sort of consolidated around a certain market segment. Now, what is that unique value that you can sort of build a different operating model? See, underlying the thesis of having a specialized company is that what is the underlying operating model that will allow you to scale at a certain degree of leverage relative to your cost or assets, right? That personally, while conceptually I would agree that there is a possibility there, do I have a practical on the ground answer that, oh, here is a sub-segment that is absolutely feasible to actually scale a business within life insurance is not yet clear to me as of now. I would argue that, let's say in the case of two-wheelers could be an insurance company in itself. It's such a massive market. What is that unique tangible sort of market that one can penetrate and say, I will just build a 5,000 rupee term health life insurance company, which is offering, to Anand's point, only sachet insurance across the board through platforms like ours or others. I would argue that there's probably some ways to go there yet. Specialized banking also, if you've seen, has not terribly done well so far in some cases. So, and I think part of the challenge has always been defining the right operating model to make sure that whatever we do in this case has a clear line of path to success, or in terms of scale and revenues and all of those things. Whether they occur in year 1 or year 7 or year 8, that's a separate question. But that line of sight has to be very, very clear. Unfortunately, maybe I'm not very clear in terms of right now to say that yes, there is that opportunity on a practical basis.
Very valuable. What you just said, actually painted a picture, which, see, uncertainty is also reality. And through all these actions, discussions, and maybe some people taking a lead in certain things and maybe failing the first time, certainty will emerge. Wonderful. So we'll stay on this theme of penetration for this round, trust and penetration, and what better topics to stay on. So moving over to Pratap. Pratap, very quickly, you spoke of the fact that this can, say, blockchain and other things can actually connect so many different records. For example, the birth records of people, government record. Government is moving into blockchain. Right? Many government records, land and birth records of many states have now already moved into blockchain. And the whole idea is to, as you say, that the thing of transparency, the audit trails, the clarity of information, do not need to ask or every time. How do you see, again, penetration using this? Because once you have information across populations, and I'm really meaning population, I'm talking about population, it's not a segment, but a population. How do you think that will help insurers to develop products and services, which will be again very easy, simple, 3 steps, sachet. But how do you think this technologies like blockchain will come in to catalyze that?
Thanks. That's a great question. Now, basically, we are talking about how do insurers improve their risk intelligence based on the information available in general about the population. So, there is a lot more information available now. Whether it should be available or not is a different question. That there is a lot of information. As you said before, that we leave digital footprints, and we did digital footprints everywhere, and we are not in control of our digital footprints, and those with whom we leave our footprints don't necessarily take good care of those footprints, and so therefore these people rob those footprints and then monetize them in different ways, and some of them basically don't exactly take our consent while gathering it, and so there is a lot of information available, whether it is sometimes it is legally available, illegally available, and so on. So let's talk about what. And then, as you said, the government is also making a lot of information available, capturing a lot of information. So based on the availability of information, and there is a need to make sure that information is gathered and managed correctly. To take the example of GDPR, for example, where you take the consent and gather the information from the individual. Now, there may be market information which may be available about not necessarily individual level, but of segments. Now, you use all of this information, and without identifying the person, you are able to build significant data sets which give you information about the risk of various categories. So, for example, there are people who work in different types of professions, and different types of professions have different life related implications for their life risk. There are people who live in different regions which may be close to hazardous places. For them, the life implications are different. There are people who live in, I used to live close to the RCF factory in Chembur, long ago. So that, the people who live in Chembur in Mumbai basically have a different life set of issues. And, there are the people who work in sanitation, sanitary work, who enter the drains, they have different life aspects. And, people who get exposed, people who get exposed to COVID in the health segment, those people have different life factors. So there is a lot of information available about who's, and the, surveillance technologies of different kinds are available, through which if you can identify the individual, and you can measure basically various types of risk elements related to this information gathered with the individual consent, based information gathered through public surveillance systems or information gathered through private surveillance systems, where to some extent you can monetize without, as long as you don't you can analyze as long as you don't identify the individual. You can analyze without identifying the individual. So to that extent, you can measure risk and leverage that in your processes. So that's basically the most important thing. But once you have measured this risk information, making sure that you can use it to contextualize it when you apply it at the point of decision making. In the underwriting process, it has to matter, and sometimes this information may be dynamic. So you need to leverage different types of technology to to source this information, organize and process it, and make it matter at the point of decision, whether it is in the especially in the underwriting process, but not necessarily limited only to it. It could be very well in the claims process as well.
Thanks, Pratap. Thanks. That was very illuminating, and it really provides a kind of an action path for industry and technology companies to follow, no doubt. And any breakthrough there can make a big impact. So quickly coming back to you, Suhail. So Suhail, you spoke of emerging technologies. You spoke of things like, let's say, taking a picture and finding out health, like a selfie and predicting BMI. Yes, those technologies are improving day by day. Iris and skin, or people are finding different markers, for everything nowadays. So I'm sure this will improve. So taking a cue from there, as we move from laboriously filling forms, or even filling forms on keyboard or on a PC, moving into image, voice, surround information. How do you think that's going to really get the, I would say, the digitally naive? Digitally naive could be locational, it could be age-based, age or cycle. Age is no longer the real numerical age, but I'd say it's people who are pretty much averse to really filling in things and all the digitally excluded so far, which has a positive correlation to with age, maybe not in next 10 years. So the geriatric population, the above 60, how do you think one can evolve products and solutions, effective products and solutions for them, using hyper-personalization and these newer methods of image, voice, environmental info? That's another penetration problem for the country.
So Joydeep, I think you are right. The way you will interact with the digital native customer is very, very different. I think right from the time of prospecting, look, I think nobody wants to fill a form. So the fact here is that the moment somebody gives you consent and you know a person, if he gives you a consent, can you look at Aadhaar, his bank, this thing, and obviously with his consent, and you can properly pre-populate this. Today, I think many of the insurers today compare, how many of your fields today pre-populate. Somebody says 70%, 80% of the information you don't need to fill. Second is, how do you interact with the brand? Or do you actually go to a website and you type in life insurance? While what our research has shown us, most people in this still search for category and not for a company. And therefore, what you see this is that, you take it one level further and, and you're watching a sense of TV and suddenly you say, you see some disturbing news and you have Alexa next to you and say, I want to get protected. Can you begin your journey from there? And can you all your SEO work around your search and your optimization, everything, and can it bigger from there? Can the system know you enough so that you don't have to fill in any details? Can you give a consent verbally so that the data can be taken from the backend? And maybe your entire journey can finish, in a matter of question answers verbally. So, if you ask me, that one day would be the, how do you talk to a digital customer? Second, even how do you communicate to him once you are onboarded? Look at it, he doesn't want, and while I know the regulatory things and how a policy pack looks like and some of those things we need to follow. But as I said earlier, how do you explain a complex policy to him? Can you personalize a video for him, in the journey? Similarly, if it's a seller driven, right? These no longer are these very hard channels. You may come to a bank, start your journey, but you may actually go home and finish your journey. So how can you seamlessly move, from one platform to another? A lot of times people are saying that customers do not want to come to your platform. So for example, you're on WhatsApp or you are on Windows or Messenger of Yahoo or whatever it is, right? Can you simply say, hi, hi Max Life or hi anybody, right? And therefore journey starts. You don't even need to be on a bank or on an insurance company's this thing. The third, and I think these are the places. Secondly, also the similarly importance is that when you are interacting with say for example, when you're communicating with the customer, is your customer communication two-way interactive? You are not telling a customer to go to a specific place or log an issue, right? And then even the other big thing is the whole emotional content with the customer. The digitally native customer wants very personalized. For example, if you're coming in and knowing from where are you coming in, what is your background? Do I know enough about you to pitch you the right product in the beginning, or actually make that selection more, more prescriptive, where I can offer you in the, out of these 20, these three, mean for you. Similarly, going to the other side is that today the guy is used to having a, ordering something on Zomato, and he knows where his order is. He can track, it has left the premises or accepted by the restaurant. It is 5 minutes away, 3 minutes away. Can you give service guarantees when you offer complex products? Can you say that I want to launch, you will get your, even if it is underwritten or is a medical, you know that you will possibly issue in 4 hours, in 2 hours, if it's not instantaneously. I think those some of the things of what we call some of the founding blocks are very, very important. One big area we have seen is voice and vernacular and video. We keep on saying, I think it's become a cliche now. How does it go further? Is all your communication, you are doing in vernacular? It is all in videos. You are not sending lengthy documents, or you're sending them. You're supplementing it with more customized videos. And communication becomes a very, very big area. Also, how do customers interact with you? And this is seamless. As I explained earlier, a guy will come onto a website, he will start chatting. He doesn't want to talk to anybody. But if he is stuck, can immediately an agent take over? And agent should know what exactly you have done before that very moment. He's not asking any repeat questions. And he can probably also, get his alignment to look at his screen and help him conduct you where he's, you de-bottleneck him rather than begin a new journey. We have seen, and this is already happening today, that where the IVR tree changes depending on what your last transaction is. So if you have actually done a premium, you are trying to pay a premium and you couldn't pay in a website, and when you're calling a help center, the IVR tree dial 1 for pay premium, and the guy exactly knows where you were. So I think this so-called seamlessness, omni-channel ability to go beyond physical filling, an ability to work from your own asset or own ecosystem and not having to come to an insurer or backing ecosystem. I think these are some of the key things which will play a part as you deal with digital native customer. Obviously, this has to be backed by the right product propositions, right marketing and digital marketing communication. I think they all need to support this proposition in the end.
No doubt. Thanks. That was again very, very interesting. And as I keep saying, each of these conversations that all of you are having can spur a whole conference, because there are so many aspects of it and we are short of time. So definitely wonderful ideas. I think any of these ideas I would ask NIA also to take note, and the audience. And incidentally, there's one interesting question from the audience which has come in, and if Srinivasan permits, I think we should take that question, sir, before we end. We have a little time, so I'll direct it to Anand, because he is coming from the largest life insurance, private sector life insurance company. So Anand, there's this question about all fintech companies who are dealing with AI, ML, and they're trying to find solutions. There is one fundamental need, and that is tons of data. And they can't prove anything without tons of data. They can only talk about it. So therefore, would insurance companies be ready to share the data with them? And if yes, how can they be? They can be kept there can be security of that data. So any insights to share?
Yeah, it's a very good question, and let me give you an example, a live example of what we did with SBI Life. All the fintech companies will come with some solution where obviously it's based on data, and the people, you look at life insurance because this is the only sector, and I'll repeat, this is the only sector where you have large amount of data. And it is the current data that you have, because every company runs in a program to have, updaters, calls, the telephone number, address, all that stuff which is required for us to run a policy. Now, what most of the companies do is when you find a technology partner whom you want to partner with, a fintech company, you sign a non-disclosure agreement with them, and then you give only a slice of data. You don't give a whole data to them. And there are certain PII factors which you encrypt and give it to them. They work on that data. They do a proof of concept to you. You bring it back, de-encrypt it, and then see whether that proof of concept is actually working or not. In fact, just to tell you, when you were talking to Mr. Tambe on blockchain, you remember in 2016, 17, 18, we had 14 companies who came together and worked on 2 large POCs on blockchain in India. And in 18, I also had the opportunity to conduct a seminar, half-a-day seminar with Sathe sir as the chief guest for that function, where we spoke about how blockchain technology can be made an integral part of, and how life could become very, very easy for all of us, including the other partners like banks and others who also do, have a lot of data. Even at that point of time when we had to share data, we did it exactly in this way. So the PII data doesn't flow out. The PII data is encrypted. That remains with you. The what necessary data you need to give to run that proof of concept is shared. But after verifying the credentials and also signing an NDA, which is strong enough to take action in case if something goes wrong. One thing I think in data, what we need to keep in mind is that every company who is looking at data, especially the life insurance companies, will also have to look very closely on the Data Privacy Act, which will be brought very shortly, because that's something which is going to be a very, very important part, even on how you communicate with your customer. Okay, so I was reading the draft of it because we were working out on certain technological developments on whether my customer can use WhatsApp with the insurance company. Now I need to take a consent. I need to hold that consent. I need to also give him an option to to knock off this consent. So once the consent is knocked off, there is no way I can go back and communicate with him. So there are a lot of regulatory and by which this data can be protected, provided the company is aware of what they want as an end result. The bigger problem in POCs, what I have seen is that the people who are looking for these kind of technological interventions are fully not aware of what they need at the end of the day. And that is where the mismatch of technology versus the end result, or the use of technology with the end result and the sharing of data happens. But data can be shared. It is very successfully done in the life insurance industry, and there are enough live examples and contours which can be followed to get the sharing of data possible.
Thanks, Anand. That was, I think that has amply answered the question. Yes, and there are many, many examples. So with that, we come to the end of this session. I think the questions have been answered not only fully, but I think raising more questions, and those questions will be answered as we go along. On the trust, penetration, and all these larger issues hanging over the industry, if they have to be solved, I think people need to listen to this and take the pearls of wisdom away and take action. Thank you very much. Over to you, Mr. Srinivasan. Thanks a lot. And
thank you, Jaideep. It was a great session. I think compliment all the panelists for very valuable insights. Shalini, you can.
Yes, sir. Thank you so much, sir. Gentlemen on the panel, for conducting such a comprehensive and insightful discussion. Ladies and gentlemen, that concludes our morning session. We will now break for lunch and reconvene at 2:30 p.m. for the final panel discussion and the announcement of the much-awaited essay competition winners. So please join back at 2:30 p.m. Indian Standard Time. Thank you.
Okay, so ladies and gentlemen, welcome to the third panel discussion on yet important aspect of life insurance industry, the regulatory interventions and new product offerings. For this round, the moderator is Mr. Bikash Chaudhary, appointed actuary and chief risk officer, Future Generali Life Insurance Company Limited. And in the panel, we have Mr. Philip Jackson, principal and consulting actuary, Milliman India, Mr. P. Muralidharan, executive director, marketing and product development, LIC of India, Mr. Mayur Ankolekar, consulting actuary, Ankolekar and Company Actuaries and Consultants, and Mr. Shubhendu Kumar Bal, Chief Actuary and Chief Risk Officer, SBI Life Insurance Company Limited. I now request the moderator, Mr. Bikash Chaudhary, to kindly commence the discussion.
Thank you, Rishika. I hope I'm audible.
Absolutely, sir.
Perfect, thank you. Thank you for your confirmation. Good afternoon, ladies and gentlemen. In such an August gathering, we've been not able to meet physically now for the last 2 years. The CD Deshmukh is one of the stalwart seminars across the life insurance industry.
Good afternoon.
Good afternoon, sir.
How are you?
I'm good, sir. Thank you. And we have over here a esteemed, respected and distinguished panel, a little bit tilted more towards actuaries, and we have a representative from the biggest life insurance company in India, LIC, from a marketing and product standpoint. To give a brief background over here, I'll start with a quick presentation to give a background of the session, and then we will move to the main session. Ruchika, kindly confirm if this is visible to all.
Yes, it is visible, sir.
Yes. So this topic for this session is, as he said, it's about reimagining the life insurance business models. The topic of this session is regulatory intervention and the new product offering. So I'll quietly give a brief background and the history around it before we move to the panel discussion. I'll try to cover the first, and in this graph talks about the insurance penetration and density, as Mr. K. Ganesh also mentioned, that if you look at our insurance penetration, where the global average is about 3.3, we have been somewhat been able to achieve this over here. Over here in terms of life insurance penetration, there has been a very high during 2008-9, but then there has been a fall during the periods 11, 12, 13 and 14, and then life insurance again came back to the situation. However, as far as the premium per capita GDP, when you look at the insurance density, how it is measured, when the global average is 360 USD, there has been clearly an increasing trend from a purchasing power parity standpoint, but still it is far ahead, far behind what we need to reach for. And that's where we talk about the gaps. This is a growth phase over last 2 decades of the life insurance industry, and I will be mostly focusing about these 2 decades where the privatization life insurance industry happened. It's actually broken into 3 parts. If you see the first phase of ULIPs and the companies who just started and opening up, there was a complete CAGR of about 40%, till there was a financial distress in FY08. Coming with that was the change in regulations, which we will cover, and there was a CAGR clearly falling down for the next 4 or 5, 6 years. But again, there has been a material CAGR growth over the last 5 years, as you can see. Overall, the new business growth, and this is one of the measures, new business growth has been about 19% CAGR over the last 2 decades. Correspondingly, the other measure is the renewal premium, and another measure is, when we look at it, something called conservation ratio. Now, what exactly is the conservation ratio is how much is the renewal premium you collected this year divided by the total premium you collected last year. Not necessarily a completely error-free measure, but it does give you a fair idea about how much is your renewal premium and how is the persistency moving, but a crude measure though. So if you look at the renewal premium growth rate has not been up to the same level as new business growth rate. It has come up very well. Over here also, if you see, we lose about 30% of the total premiums we collected last year. That not necessarily is only due to persistency. There could be policies, as you know, can be maturing. There could be policies which are of shorter premium payment duration, which doesn't require any core premiums to pay. So this is more like an FYI to understand what exactly has happened. Quickly, when I look into the persistency, there has been clear shift in the persistency for every bucket or cohort in life insurance industry. A 13-month is called the second premium, a 25th is third, and so on and so forth. So when I talk about people who are paying 6 premium which are due, this bucket has clearly shown improvement, but it is far behind when we look into the matured companies. And there are many discussions around that it is showing a trajectory and a trend, material improvements, but for way to move from that standpoint. Now let's talk about products. So we talked about new business, we talked about the growth, we talked about renewals. Now what does the product mix trend has been? The orange line is what we talk as traditional product or non-linked products, and the blue line is actually the ULIP products or linked products. There was a material growth in ULIPs, as you see in the year, and I have not been able to plot the first 6-7 years data, but if you look at, there was a material growth in ULIP during this period and earlier. And then after the financial distress and the slew of regulations and the cap on charges and so on and so forth, it has come down materially down and has been in the range of 15 to 20-25%. There has been seen a growth. This is a one-off, as we can clearly see, is because of the markets falling down materially in FY 19-20, which has led to a little bit lesser. What matters most important is that we are back to the game in terms of traditional products, contributing to about 70 to 80% of the business. A traditional means a typical non-linked, non-participating or a participating product. Now let's look at products. Products has to be looked in conjunction with the distribution channel. Now the blue line actually talks about the individual agents. The market was predominated by LIC in the earlier period. Even in the later, as you see, it has always been a predomination channel. Even though it has been predominated, you can see that there has been a material reduction. About 1/3 of the total mix has now shifted from individual agents to corporate agents, majorly again banker partners. Now the orange line are majorly corporate agents and banker partners. We also see a slight growth in this blue color, which is a direct agency model, which is own employees model. So there is a growth and a shift materially in terms of channels. Let's quickly look at the journey in terms of the regulations. So there are 2 topics. What are the product offerings? What are the product regulations around it? The first key guidelines, and I'll try to quickly cover over this, is the ULIP guidelines, which has come. First, it came in December 2005, talked about standardization of definition, market conduct, disclosures, and so on and so forth. Another set of ULIP guidelines completely came from Jan to September to the intent in terms of charge to the policyholder, net reduction in yield, exit barriers, impact on margins in terms of ULIPs as well as commission. Third material in terms of pensions. So there were pensions were available in ULIPs. ULIP pensions were sold with 0 death benefits. Surrenders can be done. It was and you don't have to take the commutation as 1/3, 2/3, and so on. Annuity was not, and these were the changes which were done, is that even on surrender you have to do a commutation. Annuity is made mandatory, so the OMO option or open market annuity option went off, minimum guaranteed introduced, pension plans reduced, and this was also a time, even though the NPS did exit for government employees since 2000, 2001, this was a period around 2009-10 when it did open for the corporate sector as well, and there are additional tax incentives. The next, as we know, has been about 8 years before in Product Regulation 2013. Just to key summarize, major was one, the policy term has to be minimum 5 years, and the premium payment term has also been to minimum 5 years. That's one. Some products being stopped in terms of CPPI or index links or unitized with profits or GSLI, which is the group savings product. Major structural change in the VIP products. Now, these are some categories of products and enhancement of values in both traditional as well as ULIPs in case of exit of customer. Even after 2013, if you see within why the non-linked has come up, there are some reasons for it. So one of the key reasons was also something called expenses of management. And the expenses of management did impact the business products, one key being participating product, where it was capped that the insurer has to have the maximum charge to be done in the fund is up to the EOM expenses, which led to a little bit influence movement of products towards non-participating guaranteed product, which lead to higher margins, protection of EV. This was a seamless one. The major what happened was that use and file was allowed. Only key major happened was it reduced the time to the market, because the products you can do a use and file and immediately launch it. Another one did pick up well, it does require more, is about POS product, which is a point of sale product. The intent is simple products, quickly issued. Intent is non-medical, though even though medical is allowed, non-medical. And the point of sale person can be even your next grocery store. You don't require an agent examination, and it's a simplified products, you can sell it. And last was the 2019 regulation, which we have looked into. The major, these were all positive movements when we look into 2019. The NPS and the pension plan becomes consistent. There are reduction in premium allowed, suitability analysis, operational aspect removed, surrender allowed. The biggest part was the surrender was now allowed after 2 years, and even the surrender values got increased. So that's a key summary of the journey of the product regulations. How did it impact the journey of the products or the business? So if you look at till about 2006, participating products were popular. Till about 2000, participating, which was primarily endowment, joint life, and the only one insurer, life insurance being LIC. ULIPs evolved. Over 2017, innovation came into the picture. NAV products, guaranteed products, CPPI products, zero allocation charge products, and high administration charge products led to a lot of mis-selling and complaints, coupled up with the financial distress which happened. Okay. 2010 to 13 was like every day there was a regulation coming, and I've seen this phase every day about ULIP charge cap. There were restrictions on variable. There did tussle about two different financial industries which happened between mutual fund and ULIPs. Term did pick up very well. Web aggregator started picking up. What happened in 13 and 16? Market was fairly just grappling to pick up the things during this period. Market moved to guarantee. They were grappling to cope up with the changes which happened material in this. If I were to ask you over the last 5 years, what has happened in the history, there has been clear further focus on non-par products, focus on open architecture model, shorter pay products, increased customer focus, clearly on persistency, complaints, frictionless journeys, surrogates to customer underwriting, characteristics of financial status. Derivatives are biggest in 2014 when this regulation came. It has paid for how do you manage guarantees and use of FRA, which is forward date agreements. There has been in the recent price war under non-par products. 2019, 20, 21 has clearly seen products which are 6%, 6.2, 6.3, 6.4. Everybody gunning for a IRR as one of the key measures. And digitization also gained momentum. To cover quickly about what exactly happened, this requires a little bit of a separate focus. Is term plans. Focus clearly increased from 2017-18 with major and listed insurers moving towards this. Ease sale happened, non-medical limits happened, price war happened, that led to reduction. It was a downward spiral till 2019 when the further aggressive pricing and increase in rates happened. And there has been clearly post-COVID, which we'll cover over here. Now, there has been increase in terms of people realize the uncertainty. There was a surge in demand for term and health products. There has been experience of material losses, and there were post that their underwriting has also become stringent in terms of term products. that medical and demographic underwriting did increase, and term rate have already seen 2 sets of increase in rates, one already and the second is going. One key point was also about the annuity market which started emerging. The pension policies got matured. The NPS bucket got movement now because the commutation has to be done. The premium, if you look at including the NPS, the growth has been year on year about 30% for the last few years, and there are long-term guarantees. With this as a history and this as a topic of the background, now these are certain opportunities and challenges I would like to highlight. Do we as insurers, do you understand the customer need? Products looks very similar to each other. Is there a need to have a differentiated offering? Do we need a time to look at sharply targeted products, fund-based for senior citizens? Why a minimum cover required? Can we envisage insurance as easy as like credits or loans or use other surrogates? CIBIL score, why do I require separate other ways? Is there a time to look at the underwriting rules, which is more like a stagnant 1 point discrete at point of time of issuance? Can we look at the way we need to do at new business issuance? What do I need to do as instance issuance? Given that non-par is fully guaranteed and ULIPs are fully non-guaranteed, can we, even though we say par in between, but do we have something as a par in akin to in a ULIP platform where people are able to see their own money as like a bank account? And then the guarantees are there as minimum and the upside is there. Many other products, index linked and other things can be happening. What are the alternatives to long-term guarantee, even in protection when we cover for whole life? Can we look for variable annuities or participating annuities rather than a single non-par annuity, which are nominal in value terms and not able to protect your inflation? Are we prepared to look at significantly different proposition, temporary life insurance, health savings account, recurring premiums, irregular premiums, or people able to skip certain premiums and do not need to pay back all the premiums on revival? In terms of disclosures, now given that everybody talks about customer IRR, should we show customer IRR as part of our illustration in the customer? Should we at least show a break-even point that at which year you will be at least able to get back all the premiums you have paid if you surrender? And those are the things we need to look for. From a taxation standpoint, does GST at 18% protection, is it genuinely a service which need to be charged, or is it a need of the society? Do we need to charge annuity payments as well? Does a single premium require a 10 times cover when there are no further premiums to be done, and throughout the tenure there is risk? With this, I'll pause and I'll look into the things. Sorry. With this, I'll pause and I'll take us stop from a standpoint of our moderator. So I've given a quick history and a background. Now I'll try to take your thoughts about these thoughts, about pointers. And the first I'll ask you, Shubhendu, the first query I want to take your thoughts about is, with the changing protection risk landscape, which is mortality, morbidity, pandemic, what's your thought? Does our existing product offering meet the needs, or do you think there is need for new product offerings to propel the need for this?
Yeah, thank you, Vikas. First of all, it's my privilege to be in this place, and I thank CNIA to be a part of this panelist. You have been given the setup, the context very nicely, Vikas. Almost have been covered the most of the topical part of the products, and also no doubt how the regulation have moved through. Also, your initial discussion about the GDP part, where we are being belongs to, whether we are still at the gap, whether the gap is the insurance gap or gap is the protection gap. All those things really comes into the consideration. And your last slides of that quite a few slides, which has been combination of the slide, that do you understand the customer needs, and the question among ourselves about the insurance. I really like possibly that is the most. Sometimes in the first of today's first session, it has been discussed very nicely, and I think one of the panelists has mentioned very nicely that we really require the partnership among the customers. So insurance company and the customers should be partner, rather than they are like we are the insurance company and we are the customer. So that's the one point I want to put on, just to start with this particular question, that in current situation, why the need has been made, whether product current offering can be the best one or any other offering has to do. So let me start with your first initial topic, that protection risk landscape. I personally believe that our protection need is there for always. Only thing with the customer understand that need, insurance company or distributor able to explain that need, like the way it has been discussed today morning, that as a partnership part, that is exactly come into consideration. So first part is that mortality, morbidity, all those risks, possibly everybody knows it in advance, and the risk is there, hence possibly insurance companies are there, and no doubt, but we have to take care of that particular need and particular things into account. How we really can take care of the protection part has been really understood by the customer, and hence all of us, all the insurance company, all the industry can create that need through the product pricing, or through the product offering, or through the product design. So as of today, if you look at it, I think all of us are the, being the pandemic come into picture, I want to start basically from there only. Possibly the understanding of the protection and need about the protection is a little bit highlighted. And possibly the people who are not able to understand that whether really protection is the need for them, because people cannot visualize that need. This is the really understanding the needs rather than the visualizing the needs. So protection product is like that. As you nicely mentioned in your details also, there are quite a few saving product, participating product, traditional product and doing good business. But if you really break up with the lowest part, your protection gap will be still a huge. Overall total business, if you take it in the industry, I still believe the protection will be much lower, which could be the best need or really the toughest need for the customer in regard to the current situation. So having said so, yes, all the things, all the product offering, and also quite a few cases, the existing product or new product in the industry, if you're talking of the protection per se or health per se, I think that is enough option available for the customers. My personally belief is that people are not aware of that need, and we are not really able to do this partnership with the customers to put them that how much this particular protection can help them or their family when they may not be present at that point of time. If you look at the regulatory framework also, let me put this, all the regulators creating the way you have shown that different types of regulation are being on. One of the regulation, as all of us know, that when expense of management regulation they bring in, the commissions amount payable for the protection product, they make a little higher side, right? So the objective is very clear that we have to fulfill the protection need from the industry as a whole. Till if you look at it, as I say, that protection need may not be full to that extent. Nowadays, another part has come, so quite a few people are coming on the listing part. No doubt the investors, company looking, I will maybe cover that later on for all of us can discuss this point. That was the awareness also from the insurance sides. Everybody has come to picture. This is only not the need for the protection. It can give the good value for the even the insurance company. Hence, the both will be a very good collaboration, along with the need for the both the customer, one customer is the customer, one customer the insurer, both can be fulfilled through the protection route. And hence, the people have to really come forward and really do this type of announcement, this type of awareness program, so that the protection is the part everyone should understand, and we try to do it. I really happy to tell all of us that we know that because of the PMJGBY, which has started few years back, though there are lots of other practical issues there, but I personally think the awareness, I mean, so-called the pandemic and PMJGBY, if you put together both the products, I can say mass of the people and throughout pan-India, they at least understand the protection or pure term insurance, something exists like that, which is really helpful for the family, at least to a certain extent. Earlier, if you look at it, before PMJGBY, before pandemic, protection is very limited, to be frank. So I think to that extent, there are some different parties there. Yes, current situation possible, those are the things really helping all of us to understand the need, more so on the protection side. And the protection side means it could be both way. It could be the pure term protection, even it could be the health related matters. Today also, if you look at it, because the COVID only possibly, the lots of health related awareness has come forward. And all those parts is which possibly people maybe really not think the line they're supposed to think it earlier. So whole put together, if you ask me that is there any product offering or anything else to do, I believe that because of all those nature, in near future, I can see possibly now the pool product than the push product, which was supposed to for so many years. Because when people will be understand, when the people will be understand the need, and as you rightly said that if need can be understood by the customer and by the insurance company, by the distributor, so all put together, if all of us working together in the similar lines, possibly that push when comes to the pool, automatically need to be fulfilled much better way. Because people will be only pulling the things which really best fit for their needs. So to that extent, I believe that yes, protection is the still need for the masses. We are going in the right direction. Product is very simple if you talk about the protection. No doubt need little bit of here and there modification can be done based on the how you want to get the benefit. somebody wants to get the at the lump sum benefit, somebody can in the protection or can in the installment. All the small here and there it can happen. But overall, if you look at that protection and health, awareness also increasing, and people are also working towards that line. Only one part I want to add over here, it is little bit, or if you take this little different line, you also mentioned nicely that GSLI products or group saving link product has been really stopped. Now, if you talk to the micro insurance types of products, where the very mass affluent people are there, but they're very low income group. If they can try to save some money, but they can pay a premium for one time, they cannot premium for possibly the second time, third time, they may not be able to pay the premium. And sometimes if they don't pay the premium, they lose the whole of the risk benefit. So whether these type of things can be concepts can be discussed and try to make the offering in this line. That some product can be of the micro insurance product, where suppose a risk cover you take in the first year, so that coverage will be for the whole year will be covered automatically. And the saving part, whatever they will be putting it on, it can go for their own kitty or the small way. I'm just thinking all those lines, those types of offering, and again I said the need of the customer. If you can align that line, I think yes, insurance company, all insurance company put together, along with the awareness of the customer, obviously the full support with the regulator and government can really take it forward. So I just want to stop over here in this line that yes, that the protection gap, need, and all of our good collaboration. And as the first discussion I said that the partnership among all of us really can make this thing little much better way. I just want to stop over here, Vikas.
Sure. Thanks, Shumendra. Very good thought. So in key summary, as you said, yes, we need to be partners with the customers. The products are there. It does fulfill the need. Awareness is a challenge. And yes, the awareness has moved towards COVID. Also in the earlier session, we were looking at that these are short-term memories as well in terms of when the pandemic goes away, people might need to move forward. In light of that, and Mr. Murli, I would like to take your thoughts. Now, given that there has been a protection and the products are already available, now when you look at the thing which has happened during pandemic, there has been a movement towards digital sales, material use of technology. So when you talk about digital sales, use of technology, involvement of insurtechs, how does the product offerings can be amended to meet the needs, if at all there is requirement? And what do you think is the regulatory support or guidelines you would require to foster the same? Mr. Murli.
Thank you. Am I audible?
You are visible.
Okay. Thank you very much. Good afternoon and good day to everyone. First of all, thanks to the NIA for having me in this panelist and welcome to the members. I would look at the digitization process in three different dimensions: the distribution dimension, the products and the insurer dimension, and of course the customer dimension. If I look at COVID, as already stated, COVID has impacted insurance in a big way, both acquisition as well as in retention, in more than one way. Like there has been a consciousness, but there is also a business. There is a loss in renewal because of all those factors have come. At the same time, you cannot deny the fact that insurance is a push product and will remain a push product, despite the fact that we the awareness being increased and all that. World over, agency major channel difference, and even in India, it is almost 64% agency and maybe about 36 to 40% from the partners. But to me, if I look at it from my AIC's point of view, it is 95% agency. What I'm trying to put across to you is from the distribution point of view. As market matures, as company and the insurance market becomes more and more mature, it is learned and it is seen that the agency channel produces much more value than the alternate channels, basically because of the limitation of value creation to other channels because of their open architecture. The value keeps on increasing as time progresses in open architecture kind of. And that probably explains the reason why probably the companies in India are slowly moving towards of the agency model. Now, I have this question always lingering in my mind. Does distribution, digitization of distribution mean only accommodating the cost of distribution and not passing on any benefits to the customer? Insurance remains a full product, and therefore you need intermediation at any point in time. Technology must also lead to reduction in management expenses, which in turn should be passed on to the customer. And that is how the pricing should be reduced, not just like cutting away the remuneration of the distribution. Technology should also look at other angles, in fact, strengthening the distribution channels. And then, of course, in a country like India and in many other countries, life insurance still remains a product. Therefore, intervention, as I said, is required. So what is required to be done probably is maybe efficiency in enhancing the distribution channels. You create more visual workspaces, virtual workspaces, maybe thinking of digital studios or tools for visual explanations, mobile apps, and the similar kind, e-sign flexibility, quotations online, all of these things need to be so that companies actually must robustly support agents with enhanced digital tools and then authorize into automation solutions to have to be working. This is the first part of it. And the other part of it is and the other thing is, of course, I was just reading through the World InsurTech Report 2021. Customers expect insurers to provide convenience, advice, personalized and professional advice, and technology oriented, and point of sale is technology at the point of sale is assuming great importance. The fast moving digitization has its own risks. There are actually, I look at it, there are two risks. One is data security, the risk of data security. I would that's not crucial, which actually leads to.
I have to interrupt. I think it's not completely audible. There has been some lag and some noise. Is that my understanding correct with other panelists as well?
Yeah, it is not so clear. Maybe it's a disturbance.
There is
but the message is coming through.
Yes, but the message is coming, and just wanted to let you know, sir, there is a bit of a disturbance. That's also. Please kindly go through, sir.
No, of course. Even though I'm not audio, that's the only thing.
Perfect, sir. I'll get back to you. So yes, you mentioned about how do we improve the distribution channel, the convenience of customers? How do we use the InsurTech?
I just have two more points. So I think about data security and data security, and that is where need clarity and firmness. Actually, considering the current regulations, which are more to protect the customer rights, and rightly so. Then insurers also need to get their work right while engineering bottom line, that is run area, and regulator support will be required. Seamlessly, like say, where is it possible to give you already seamlessly legal bands? It's simply that the policy can be controlled from and possibility that why not some kind of seamless there we rest at this point, maybe later we will.
Thank you. Mr. Murli, I'll request, I'll get back to you. I think if you can just check your connection. The last part was yes, or it was not fully audible. Probably again the typical technical glitches which we typically see. So apologies for that. Yeah. So understood from Mr. Murli did cover about distribution channels, the convenience of products, and how do we look into it, and the regulator looking at both from a top line, not necessarily, and also try to see how do we brush on the bottom line standpoint. So yes, with that I again, given that we are looking for product offerings, let's see if there are. At the product offerings, and are we genuinely having any gap? And I'll come to Phil Well, do you see if there are any gap in the current product suite which we offer, which still do not meet the the needs of the customers in terms of, say, senior citizen or long-term care products, or in terms of you're seeing morbidity or health products, or micro insurance, or any other areas which you feel that there is a need where the product offering do not, or if they even if they exist, they do not necessarily meet the complete needs of the customers.
Yeah, thanks a lot. Thanks a lot, Bikash. So I think actually even Subhendu sir put it quite nicely, that maybe on the protection side, we probably, the products maybe are largely there now. We do actually have those products on the shelf. We're all clearly hoping to increase the penetration of those protection products, and there's definitely a customer education component to that, rather than just a product solution to that. I guess given that, you know, protection really is the name of the game, I think we would definitely be wanting to see more innovation in the protection space. And I think protection is probably also a good focus because it's one of the, you know, it would be mostly targeted at those demographics where potentially their lifestyle and their behaviors are changing more, and where we have to be a little bit more adaptive in terms of what, you know, how we tap into those markets. So, you know, if we're thinking about protection covers and we're thinking about people in that kind of 25 to 45, 50 years bracket, then that market is changing quite a lot. There's a lot of digitization of their other purchases going on. And obviously with more nuclearization of the Indian family, then, you know, maybe in the past where you would have had a kind of more joint family structure and the families kind of bearing the financial burdens of the family together, you know, it's probably that demographic that are buying these term plans in that sort of younger age that are where their needs are changing more rapidly. But I think I agree. Maybe from the product side, the products are there. But I think we definitely need to keep that focus on innovation in terms of making sure that we're adding all the different perils, that we're making those products as easy to buy as possible, that there's not any kind of friction if we want to make those purchases. You know, we've done a lot of work in terms of EKYC and all of those kind of things coming through. But definitely, I think making sure that those protection products continue to evolve, continue to add more covers, continue to be just easier and easier to sell online, I think is certainly going to be key. And I think you mentioned on health covers as well. I think there's definitely a space for the life insurers to be, you know, adding more and more health covers into their portfolios. And, you know, health is a very, very tricky market, as the health insurers would have found already. But that really is probably where we need to, you know, focus our innovation in terms of those protection covers. I think also, and you also touched on this in terms of micro insurance. Again, maybe I think there's probably more of a product solution there in the micro insurance space. Definitely, it has the same challenges that we have making any insurance sale, with it being a largely like push product. That challenge is really there in micro insurance, and it's not just a product issue. But I think we don't see too much focus from insurers you know, many insurers don't focus, especially in the private sector, don't focus so much on the micro insurance space. And I think, you know, many of the micro insurance products, I guess, tend to be essentially a lower ticket size version of a product that exists for a wealthier customer. So I think that would be an area as well. I think that there's a huge untapped kind of opportunity, I think, in India in the micro insurance space, where we can A, look at gaining some business, and B, do some serious social good. And I think definitely there would be looking at the way that we design and market micro insurance protection products, you know, keeping those costs of sale as low as possible. How do we make those products, you know, tailored to a micro customer, rather than trying to, you know, sort of adapt an existing product. And I think maybe there is a product piece, but there's maybe just a question of focus, and whether insurance companies are ready to invest in, you know, really trying to go out and tackle that micro insurance space. Maybe that's going to be a bigger item. But I think in terms of from a product standpoint, I guess where I definitely do see some gaps is in the long-term care space. I think you'd already mentioned that, Bikash. I think that is insurance companies globally are very big players in the long-term care space. Maybe that market is going to evolve a little bit more slowly, than let's say a protection products, because the customers tend to be a little bit older, and maybe they have existing kind of arrangements in place that their needs are not so obvious potentially right now. But definitely, I think that the long-term care space is really a big gap in India. There will certainly be a need. Maybe it's an unrecognized need at the moment, and again, there'll always be an education point to this, but I think there's probably an unrecognized need there for a long-term care offering in India. Especially, as I said, some of those 20s, 30s, 40-year-olds start aging into older age brackets. Those generations that now are currently buying your online term plans and are currently in their working phase of their life, as they start thinking about their long-term care needs into the future, and maybe they don't have so much family support around them, or there's more nuclearization of the family. I think that market will certainly evolve. Hopefully, we can sort of take our lead there from the protection space. That as we keep driving education and driving product differentiation in the protection space, that maybe more naturally morphs into the development of a long-term care market. And I think that maybe an area that's sort of similar to that. So if we kind of keep pushing the life cycle of the customer, the lifetime of the customer on, I think retirement is an area where we actually, interestingly, have potentially done a bit of innovation recently. Annuities have become kind of part of the non-participating savings environment. I think whereas maybe 5 to 10 years back, we were selling a lot of limited pay endowments, maybe a 5-year, 10-year, 15-year endowment policy with a short premium payment term. A lot of those are now morphing into an income type product that looks a lot more like an annuity type product. But I guess it's still within that kind of guaranteed annuity type structure, where we're essentially going to be giving people a guaranteed income stream over a long period, and insurance companies will be looking to invest in government bonds or corporate bonds to back those liabilities. And I guess and maybe that's, given the way interest rates have been historically, I know they're relatively low now, but given that we've been in a sort of 7, 8, 6, 7, 8% interest rate environment, maybe those guaranteed products have kind of met the need and not been looked at too much. But if you think about maybe a falling interest rate environment, or even still, if you think about the fact that equities over the long term will tend to be performing 400, 500 basis points higher than your government bonds and your corporate bonds, it would definitely seem to suggest that there's a lot of customers out there that could get value from maybe an index-linked annuity or a variable annuity, as they're called in the United States, something where they keep that access to an equity exposure or a property exposure or some more exotic assets, while still the life insurer is doing their job, their fundamental job, which is providing an underlying guarantee that will make sure that you're protected even in the worst of times. I guess many insurance markets globally have had these fixed annuity type structures, where you take a corpus and you invest it as an annuity rate for a guaranteed period, and certainly that's an important product construct. But even in some of the strong markets for annuities, I'm from the UK, but even there they used to sell a lot of fixed annuities, and then nowadays, now that the regulations don't require it, we're moving more into these kind of income drawdown products, more into terms of, like I said, variable annuities, which are very popular in the United States or in Australia. So I think maybe the biggest obvious gap, I guess, would be in that retirement income space, which is a key market for life insurers, and finding some way to give that underlying guarantee on the income while still giving some upside in terms of the long-term return and participation in equities and other growth assets.
Sure. Thanks, Phil. I think you summarized very well. So yes, term is the need of the hour given the younger population. Microinsurance, we need to find a way to how to reach the larger masses. You did mention also about that long-term care is needed, given that we will 10-15 years down the lane that the way our population is aging, and we would require benefits which are flexible in nature. I'll extend this query again further to Mayur, to you as well, and this is not necessarily only about the existing product offerings. I'm trying to understand, what do you think is the protection gap and how do we fill it? I also would like to see from a saving standpoint of view, are we doing enough? And I'll add to further to this that there were existing products also when the market opened in the first decade, such as GSLI, or the flexibility in the products of not paying a recurrent premium. With these, when I look into overall, do you, in the current standpoint of view of product offerings, do you find a gap?
Thank you for my panelists for the discussion and Vikash for this question. While all of you have talked about individual products, I will take a different route and go to the group products to start with. Let's look at the pie of the new business premium. About 2/3 of the new business premium comes from group products, and there's a history to it. That history is because of a very generous EEE regime in India around defined benefit pension funds. The taxation is extremely benevolent. In addition, insurance companies have invested substantially into the group business, especially the group fund business, over the years. And as a result, that pie is today a substantial part of an insurance company's commitment to the economy and to the people in general. Let's look at what has happened now in the last 2 or 3 years in the Indian corporate sector. Many people don't realize there has been a silent revolution in the Indian corporate sector. Many Indian companies, about 80 to 90%, have moved to reporting under the IFRS adapted standards. And what has that done to the group pie? Under the new accounting standards, the entire volatility arising from movement of assets, that is, you can now invest in more risky assets, have a better ALM, that can be parked in an other comprehensive income which does not affect your earnings. And now the onus hence is on the insurance industry to look at this as an opportunity, because now there is a greater argument that pension funds, which contribute to about 2/3 of the new business premium, can start looking at investing in a manner that is more meritocratic, which is based on asset liability management, where there will be a need for looking at long-term assets, which is in the form of either long-term bonds or equities. And then there are tools around it. Knowingly and unknowingly, what has happened from the IFRS adaptation is that every company has started now disclosing what is their obligations duration. So every company now knows that, let's say, my defined benefit plan has a duration of 10 years. And if interest rates move 1%, there is going to be a spike up and down of 10%. So they will be now looking at assets which would be in that 9 to 10 year range, which an insurance company would now have to provide. And typically these assets cannot be provided in the form of traditional funds, but they need to be provided in the form of duration adjusted unit linked funds. So which de-risk the insurance company's portfolio, the risk of the insurance industry reduces, as well as it gets fitter to the needs of the corporates. That is, in my opinion, a very large opportunity. In life insurance, let's take also a thread from what's happening in general insurance. There are two lines, a personal line and a commercial line. With life insurance, we normally don't talk about this commercial line, but this group business is typically akin to a commercial line, wherein the trustees, the CFO team, they are much knowledgeable people, and they would hence be looking at interventions, at those kinds of inputs from the insurance companies wherein their asset liability managements are properly taken care of, wherein they are not having greater problems about volatility of intra-year movements, and hence that could perhaps give a whole new rise to a new product paradigm. For example, if you're looking at equities, why shouldn't now we look at ESG investment? Because if you're going to invest for a very long term, then ESG makes great sense rather than investing in sin assets over the long term. ESG typically having a low carbon footprint like ITs and financial services and e-commerce and so on, they would typically give you much better returns over the long run. So generally, I think we are in for a whole new paradigm around the group products, given that a silent revolution has already happened in the Indian corporate sector. That silent revolution has improved the understanding of trustees who now have greater forbearance to volatility of asset price returns. The insurance industry should now consider that volatility is a product which can be sold, and it can over the long run give better returns, better shareholder value, as well as they are looking at dealing with those trustees who, in a sense, are the funnel to the immediate annuity products. In India, immediate annuity products are never bought just because someone thought that, oh, I need an immediate annuity. It is always through those trustees routes. And if you have a more knowledgeable counterparty on the immediate annuity products, then it also sets the pace for, as Phil explained, about offering immediate annuity products that are in the nature of variable with some kind of upside of equities, with some better and more flavored assets which could meet with the needs of the customer. So I think we should take cognizance of this fact that there has been a huge change over the past 3 years in the Indian corporate sector, which now offers greater forbearance to asset prices of defined benefit pension funds. We should take cognizance that defined benefit pension funds are about 2/3 of the new business premiums, and this pie is only going to increase if the intervention from the insurance industry is more tuned towards what the customer needs. I will stop at here.
Mayur, thank you. I think you touched upon a very, very important aspect which goes into the top line and does have a fulfilling bottom line as well. The group business, and it has been, I think, thank you for bringing the both on the protection part. Group does a lot of job over there, whether it is PMJJBY, credit life, micro insurance, term business, GTL, and so across the fund business, which is about the employee benefits. So thank you. I'll again extend this question to Mr. Mulli, and I'm hoping, Mulli sir, your mic will be working, given that your role. And I'll again for the proxy, I'll just try to repeat with the current offerings. Where do you see the white spaces or the gaps, whether which were already being offered earlier but now being stopped due to regulation, or vis-a-vis the other markets, and given the demographic profile changing, what do you expect would be the changes required from a product offering standpoint? You're on mute, Mr. Mulli. Yeah.
Am I audible now?
Yes, yes, very, very well. I think it's perfect.
Whether I'm visible, I'm not very sure. But
you're visible as well, and your voice is quite clear now. Thank you.
Okay. No, I was looking at 2-3 areas where I think there is a gap. First thing is that population is aging faster than in the past, and the longevity is increasing. Consequence of this increase in longevity as well as aging can be very severe on labor markets, on social security, on healthcare, etc., and will have far-reaching effects and serious impacts. Longer lives, of course, are a result of the triumph of development, but then the demographic dividend in India is slowly and is rapidly, reportedly leading to decline of dependency, and old age dependency will increase thanks to population aging, as well as, of course, because of the lowering of fertility rates, reducing of fertility rates. So the major trend in aging population, one major trend in aging population that I think is worth mentioning here is the feminization of the aging part. You know, there was a study on benefits to senior citizens, in which there was a very interesting point which was made. The percentage of widows are higher than the percentage of widowers, and almost 7% in 2011. This is not even today. In 2011, 7% of the population was in India was widows. So the issue is very simple. They live longer up to age 90s and maybe 70s, 80s, and even up to 90s. There is the frailty, the disability, and debilitating diseases are there, poor health, and of course, in Indian social milieu, the financial issues are severe. And the other part of the story is, of course, what Ankulik has already touched in is regarding annuities. The return on fixed savings, which is actually impacting the senior citizens much more than anybody else. Breakdown of traditional family has changed the entire family milieu. There is a increase in micro families, moving from nuclear families to micro families. Even Ding and Singh, that the double income, no kids, and single income, no kids and no marriage, all those things are coming in. And the other side of the story is there is a lot of urbanization and urban migration. So all this put together actually has created a breakdown in traditional family structure, which is actually the backbone of Indian social welfare. The government doesn't provide that kind of social welfare which is required of it. So the only social welfare that we had was basically the family, which is now breaking up. So the fear of living too long is actually now overtaking the fear of dying. Almost in a few years from now, the question will be how long are we going to live, and if we are going to live, how are we going to survive? What are going to be the situations that we face? So there is a space and scope for annuities and a long-term care, both of which annuities, of course, are there, but there are a lot of restrictions in it. And long-term care is the one thing that probably Philip may be able to put in a better this thing, that it is more popular in the Western countries, in Europe and US, where long-term care is a major kind of insurance, where we don't have that long-term care kind of products. Today's product actually is to face the financial and social needs of tomorrow. So that is how we should design the products, and there should be regulations which permits long-term care. There should be regulations which even permits hybrid products like pension, which also clubs with it long-term care, or maybe annuities, which takes care of annuities also, which combines with it a kind of living the expenses on living, etc. Maybe as you put in the first this thing, your first slide was also there, that we talked about participating annuities. These kind of products are there are scopes for this kind of existing products, this kind of new products, and I think we need to bring in more number of health insurance products as well. Of course, health insurance is not a portfolio of life insurance companies per se, but there is an element of life insurance that of course can be brought in. I think this is probably where I end this.
Sure. Thank you, Melissa. I think you did summarize well. Given that we have got exact 5 minutes, I'll move. I need to cover also certain questions which I'll ask to the panelists. Before that, to summarize all your thoughts, I'm going to move into a rapid fire round with each one of you, and I'll give you exact 1 minute and to answer this in terms of to summarize from your thoughts 3 things you would require to change or offer in your existing or new products to meet the landscape. 3 things you require as a support from the regulator from a new or existing product offerings, and support from other government or fiscal authorities you would kind of require. We'll first move to Shubhendu and your thoughts, quick on 1 minute, Shubhendu.
Thank you, because I think it's very difficult to exactly jot it down to 3 points. It could be 1 or 5, maybe the good number. But having said so, because let me put this line that if you want to do the product offering, as all the panelists have mentioned, if we really fit the need of the product offering, then it will make sense. Like as Mr. Mulli, as you mentioned properly, your longevity risk is coming very nicely over here. So if that can fit into the, people can come much more of the pensions types of product. And again, my first point, as I mentioned, that understanding of the need of that longevity risk can be known together, for that types of offering really can make the customer need very properly and can be sustainable also. The similar things also, as I said, protection need, understanding of the protection need, As you nicely mentioned, the credit life and good term life, which is generally done by the people, automatic cover, I can say, because of the employer perspective, those are the needs exactly fulfilling the indirect way. But if those types of things and flexibility, everything you can offer on the product offering, where people can have their own need and can choose their product, that will be taken care. The similar types of flexibility I may be having of the product offering, which could be combined with the regulatory requirement also, like that what would be the appropriate reviewable period. As you know also, the product regulation has come, sometimes it was 2 years, then it is making 5 years. I'm talking about even the traditional product. Even as you know, earlier our LIC products was supposed to happen for even till the end of the term. So those type of flexibility can be bring upon, possibly that can meet some of the customer need again, if there is genuine miss out by the premium payout due to the lapses and etc., and they can come back. So those type of possibly few of the offerings can really help the people to make the offering better and sustainable way. And
sure.
you took the
Thank you, Shubhendra.
Yeah, another one point to put it, because just to the, as you said, the regulator support and also the part of the GST part I mentioned, I think possibly all of us work together, indirect way of the people to encouragement also. Like your GST, whether it could be 18% good or 5%, or the regulatory helps also to make the products much more innovative way, comes better, and that similar help from them. All those put together, possibly it can make the things much better way. Yeah,
thank you. Mayur, you have any final thoughts other than what Shubhendu would have covered in terms of these three questions?
Am I audible?
Yes, ma'am, you are.
Yeah. Okay, I have 3 points. First is on market conduct. The regulator should start looking at the bulk business and the individual business similar to the lines that is currently being practiced in general insurance, because more and more life insurance is becoming like a general insurance product. My second thought is around collaboration. Most of the businesses do not stem by themselves. There is some string, a thread which needs to be picked. For example, the group business is the conduit to immediate annuity products and GSLI products and creating better employee knowledge. And third is about risk taking. I think insurers need to understand Say's law, which is supply creates its own demand. So even if there is no demand, obviously put on your thinking hats, create a supply, take some risk. What is the downside? That your supply may not work, but it's worth still taking that risk.
Well summarized. Thank you, Mayur. Phil, you have any concluding remarks other than what Mayur or Shubhendu has covered?
No, I think I actually would totally agree with all the comments. I definitely liked Mayur's comments about the group business. I thought those were very, 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 very fair. I suppose the one thing I would add is maybe is what I think would be great for products in the future is let's have some expansion of the sandbox. I think we've got some incredibly customer-centric regulations in India, very restrictive, insurance companies would say, but they are, we've gone into a great place in terms of trying to protect the customer through regulation in India. I think maybe IRDA has done more than that than many regulators around the world have been able to do. And what the rallying call would be then, well, that restricts our innovation. And I think maybe one, in terms of taking Mayur's challenge in terms of let's take some risk, maybe we can try and get that sandbox really, really humming and get people having a few products every year through that sandbox. Let's develop some new ideas. IRDA doesn't have a crystal ball, and they can test those products out, see if they work, and if they work, then we can change regulations. I think that would be a good thing.
Thanks, Bill. I'm sorry I have to because we have crossed our time. It was really engaging, and I'm sorry I had to put it. There were 2 queries, and I must also confess that both the queries are already part of my questions about long-term guarantees and the long-term protection guarantees. Both were part of it. Unfortunately, I could not cover. With this, such an esteemed and lot of insights, at least I could summarize on my notes. Thank you all for your time and sharing your thoughts about it. Over to you, NIA. I'm over here. Thank you so much.
Thank you so much, sir. We can see there are some questions from the audience in the chat box. Would you like to take those up, sir?
Sorry, if I have time, I would.
Sure, sir.
Both the questions. The first, it's quite interesting, and I'll probably put it on to Murli, is that why can't we make life insurance mandated as a third-party motor insurance? What's your thought on that, Murli?
this is something that I don't think anywhere in the world this has happened. It's not life insurance is not something that can be mandated. I myself personally feel the same way, but our social structure probably and even maybe in more advanced economies, I don't think life insurance is mandated.
Super. Thank you. If anybody has any other thoughts, otherwise I'll move on the one more query is there.
I think life insurance is a construct which is very personal, unlike third-party motor insurance, which affects everyone. So if the arrow is going to affect you yourself, and if you have enough of assets, then for a rich man, perhaps life insurance is not relevant. And hence, life insurance has to be more bespoke as compared to a simple third-party insurance.
Thank you. The other question is again very specific, again about which I was given that the long-term guarantees and the industry moving towards non-par. Two bits, Shubhendu, if you want to add on this, or Phil, about the long-term interest rate guarantees.
Yeah, so because you are rightly said that when we do try to test the products, when you want to make any product in the long term in the life insurance sector is concerned, one of the concern is there whether the interest rate how will move in future, and generally we price the product in advance. So no doubt that is one of the biggest risks possibly every insurance company may be facing at the time of pricing product. Having said so, some of the alternative modes and measures are available. As also you have initially put in your thoughts very nicely that the FRA is coming on, people are really utilizing that way. Obviously, the availability of the different types of security, all those things come into picture. But having said so, if you can know and you can really do the proper modeling to certain extent, the need and the customer expectation of the need could be taken care to certain extent. So the question is the guarantee, how much to guarantee? There are two parts of that. One part obviously you have to guarantee, and second part, how much to guarantee? Is it the capital guarantee? Is the guarantee based on the interest rate, or it could be index linked, something like that? So those type of nature and awareness, if the people are aligned, possibly it could be really good again partnership and with the customer education. Possibly the things can be moved on these similar lines.
Perfect. I think I've covered, Ruchika. Thank you. Just to ensure that your time is being met. I think I'm sorry for breaching it for 4 minutes, but it was really engrossing and really engaging over here. So thank you, everyone.
Thank you so much, sir. Though we still have time, 15 more minutes, it's still 3:45. So if you want to take some more questions. No problem.
I think I had a problem. I think it is my miss. I thought it was till 3:30. So we have till 3:45.
Okay. Yes. So there are quite a few questions also from the audience in the chat box. If you would like to pick up some more.
Yes. So there's another question, and I'll pick it up and I'll open this question. Can we expect better reinsurance support for getting group term insurance quote? The last year has been a great challenge, especially for intermediaries. Your input on this area. Anybody would like to take this?
Let me start with something, because to be frank, that maybe one of the hot topic and people are discussing the similar lines that reinsurance people have been rate increased like the stuff. But let us really think about the reality. Again, I will say the same thing. You have been exactly covered on that part also. The price war, if you're talking about. If you want to really discuss about the pricing, whether your sustainable pricing or the proper pricing is the one we have to think through, which could be really sustainable in nature for the insurance company. But if you look at it, we all of us, maybe sometimes earlier, we want to go for the price war because of the top line. Mostly so maybe on the group term insurance is concerned. And no doubt to certain extent individual protection business also. So when the people are really try to cut their rate to certain extent to get the business in, obviously really changing the balancing. Your sustainable pricing is really being compromised. And when you try to sustainable pricing is compromised, later on you have to catch up the point, maybe not today, by tomorrow. So I'll put that maybe COVID has been given that hints to us to think on that line. But if we really think of the similar lines that the people can be point to keep the sustainable pricing from the beginning till now, possibly reinsurance rate hike what it looks like, possibly the COVID impact what it looks like initially may not have also come into picture. It always comes to the comparison from my understanding that when you have been expectation, like I said, the customer expectation, if you take some sustainable pricing from the day one till today, then your price war could not happen, then expectation could not to go down to that level, whereby it looks like we are increasing. It can happen that we are not really increasing, we are being at par, but the par has been so far been below, it looks like increasing. So having said so, I do not want to exactly comment that whether the insurance rate is hike is there or not, but I still want to say, as per my personal understanding, that if you really take care of the sustainable pricing, so that customers will happy, irrespective of little bit of movement here and there, the price will be locked forever to a certain extent. It shouldn't be too much of deviation from the actual pricing should be charged to be fair to the customer, rather than it is high or low. That's my point.
Thanks. Sorry, I think Ruchika, my miss. I didn't realize it was 3:45. Actually, thought 3:30. So yes, Phil. I think then I get a lot of opportunity to talk further about each one of you. Phil, this is for you, and I'm trying to understand from you as a consulting background and your experience about other markets. Now, if you look at it, the average life expectancy of a newborn in India is about 74 years with a 100% ILM table. Now, the rates which has been given for a 40-year-old, if I were to apply the reinsurance rate which has been given on a long-term guarantee for whole of life, the average life expectancy comes out to about 93 years. That means if I'm 40-year-old, on an average, with the statistical probability, I am supposed to live for next 53 years. If I die early, I'm going to catch the actual because he projected that. Do you think now, with this kind of whole life cover of 85 years and coverage of 100 years term protection rates, with the guarantee of both insurer and the insurer, do you think this model is a sustainable model? And any alternatives to that?
Yeah, it's an interesting question. I mean, I think maybe just following on a little bit from what Subhendu was saying as well. I mean, if the title is Reimagining Insurance Business Models, I guess one of the reimaginings we could have would be maybe how we interact with our reinsurers, right? I've been a pricing actuary in India. And I remember that maybe it was often a tussle with trying to deliver the right price to my customers and applying some heat back up the chain towards the reinsurer. And I guess maybe I mean I don't represent any reinsurer or anybody, but at least there's a thought in my mind that maybe if we start engaging with our reinsurers more as partners and as product developers and in a collaborative manner, maybe we don't, as you said, we don't have these hikes and we don't have these withdrawing of support. So that's definitely there. But I mean, to answer your question, Bikash, I mean, it doesn't feel sustainable, right? It doesn't seem to stand up to that back of the envelope calculation that we can all do. And I think the interesting question for me is, what is the risk and what is the reward? And really, if we're taking on a risk like this, which is a long-term mortality risk where we are still emerging data, the products are still being developed, the country is still very much in a dynamic phase in terms of its mortality progression, and customer profiles are changing, and economies are changing, and cities are changing. What is the reward we're getting? Well, we're able to now sell, let's say, a guaranteed term product at, as you said, age 85. Now, is there really a need there from our customers, or are we just selling a product that somehow has got a hook to it, or somehow we've been able to, oh, you've offered 70, so I'll offer 75. Okay, you've offered 75, I'll offer till age 80. Is that really, at some point, that risk that we continue to run, whether it's us, whether it's a reinsurer, has got to maybe take a step back and think, is it really worth it? I mean, when I think about a term cover and I think about a protection cover, it largely stops, the requirement stops at retirement, right? By that point, we're in a drawdown phase. We're in a phase where we're going to take the money we've earned in our life and we're going to use it to live off. And as Mr. Morley said very rightly, we move into worrying about the risk of living, not the risk of dying. So I'd say I don't know the answer to whether those rates are right, but the question is if we're wrong, was it really worth it? Were those products really worth it, and did they really meet a customer need? And could we not have maybe educated that customer a bit better and sold them a different plan where we didn't have such a guarantee on ourselves?
No, sure. Thanks, Phil. I think yes, as you rightly mentioned, the objective of a term product is to replace the income you would have lost in case you were not around for your family. Why do I require post-retirement cover of a term where there is no income? So what am I replacing? Is it a whole life product or is it a term product? So effectively being sold as a term product, but being a nature of a whole life product, which is effectively a kind of savings as an inheritance which you are giving. So rightly mentioned, leaving to a lot of guarantee risk of something which is 50 years down the lane. None actually would go. None of us would also be surviving by that age. So other than you, Phil. So there are challenges. I would like to move to the same question about Mayur. Now, you have been into a pension and a defined benefit space for many years. You do look into the guarantees. Long-term guarantees, not only with respect to interest rate, even the benefits are unknown. So there are challenges when you look into. What is your thought with the life insurance industry now moving towards long-term guarantees? Are there dilemmas around it? Does it genuinely meet the need? Or is there a zero-sum kind of a game? Or is it a plus or minus that one will make money and one will lose money? So what's your thought about this interest rate guarantees in context of life insurance?
Okay, just before coming to your interest rate guarantees question, I'll take the thread from what Phil and Subhendu spoke about the reinsurer rates. I remember a couple of years ago, we had a farce play which was delivered at a conference. And one of the characters in the play said that the reinsurers think that Indians don't die. And that was pre-COVID. So, so we know that there are issues related to taking an extreme end. And if we have to find some kind of a middle path, then this is the time where the adjustment is happening, especially on the term insurance rates with reinsurers. Relating to guarantees, I think it is all about education. The trustees, the defined benefit space are more evolved, and especially such people would like to get products which will give them enough risk, which will be in line with the liabilities. So they really do not mind taking a lot of interest rate risk, because year on year, if they don't catch up in a year one, there is always year two or year three wherein they will be able to catch up. So I don't think particularly in group insurance, long-term guarantees matter. Long-term guarantees really are of great value to that individual who's putting all his money in one bucket for one insurance company and looking at that policy which is going to mature after a period of time.
Perfect. Thank you, Mayur. Mr. Murli, I could not take your thought. I thought because of this time thing. In your final comments in terms of your requirements in terms of product offering changes, any regulatory support or any other fiscal authority support. You're on mute, Mr. Murli.
You know, the support which everybody requires from the government is of course quite known regarding GST and regarding taxation, of course, without any questions that remains. The other thing that I think I also go with the comment that was made, that there should be two things. One, Phil was saying the flexibility in regulations, because we are too watertight compartmentalization of regulations will not lead to development of insurance, so there should be a flexibility. Second thing, of course, is the flexible product offerings. There was a, I think I got this message, I think from you only, this thing zero, you know, the flexibility in premium offerings and also flexibility in risk cover. We had a product which earlier we used to have this flexibility in risk cover, which is now not possible because of regulations again. And of course, the kind of products that are now being marketed in markets like Japan, where you have a zero premium commitment in case there is no risk cover in the previous month kind of products. That also we need to think in terms of bringing. So these are probably the offerings that I would like to, basically the regulators to support. And of course, in if you ask me what are the things that I would like to change, I certainly would like to change the pattern of senior living and long-term care. We need to bring in more. We need to look at it more seriously. It's going to be the future. Maybe in another 20, 30 years, this is going to hit the country more than anything else. Thank you.
Fully noted. I think Ruchika, this is the right time, right? 3:45, sir. And I've been able to cover all the questions. Thank you, everyone. Once again.
Absolutely, sir. Absolutely. Thank you very much, sir, to all the panel members for such a thought-provoking discussion and for also taking up the audience questions. We really appreciate your time and efforts today. Thank you.
Thank you. Thank you.
Thank you.
Over to you, Dr. Shalini.
Thank you.
Thank you, Ruchika. Ladies and gentlemen, now we are about to complete the program, and as the event gets nearer to its completion, the winners of the essay competition will be declared. I'm sure many of you are eagerly waiting for this. So I would not come in between, and I would request our Chair Professor Life Insurance, Mr. P. Venugopal, to announce the names of the winners. Sir, over to you.
Thank you, Shalini. I have a small presentation about 10 slides in which I will be showing the names of the winners. Can give me a permission to share my screen?
Sure, sir.
Yeah. It will not take much time. I'll complete. Please, can you give me the permission? Hello?
Yes, sir.
Okay, fine. Hello? Every year, I think there's some issue with my presentation. Friends, every year we look forward to this essay writing competition in connection with the Deshmukh seminar. This year, the theme of the essay writing competition was Reimagining Life Insurance Business Model for Next Decade. Along with this, the topics of the essay writing competition were three. One, InsurTech game changer for the life insurance industry. Two, FDI hike up to 74% in insurance industry, overall benefits to the insurance industry. Third one was virtual offices shall take over the traditional brick and mortar insurance offices. A discussion on that. We are happy to inform you that the team time to evaluate the essays, and we have come out with the names of the winners. There were two categories. Category one was for the students who are pursuing the graduation, post-graduation, and the CAT, CAT, and CMAT aspirants. The second category was for the insurance industry, fraternity, academicians, and others. The winners are the third prize winner for goes to Adila Sheikh, a cash prize of 5,000 rupees. The second prize goes to Supratik Day, a cash prize of 10,000 rupees. And the first prize goes to Mr. Anand Deshmukh, a cash award of 15,000 rupees. We also award consolation prizes for under each category. Under the category A, the winners are Aishwarya R, Ananya Agarwal, and Swapnil. Coming to the category B, which is for the insurance industry fraternity, the results, the winners are, the third prize goes to Mr. Virjar Mazumdar. Second prize winner is Mr. Ravindra Muley, and the first prize goes to Vinit Saxena. We have awarded three consolation prizes. The names are Samarprit Guha, Kingsut Maiti, and K. Muralidhar. For the participation, congratulations to all the winners. Congratulations to all the other participants also who have given their essays. All were well written. Like I said, the evaluators had a tough time in deciding the winners. There was not much difference between the first prize and the others. So we look forward to similar participation in the next year's competition. Similarly, NIA will be floating similar essay writing competitions in all the events. So wish you all the best, friends. Thank you. Over to Shalini.
Thank you so much, sir, and a hearty congratulations to all the winners. Now, I request our Chair Professor for Financial Inclusion and Social Security, Mr. V. Satyakumar, to kindly present a formal vote of thanks.
Thank you, Shalini. The 23rd annual Sir C.D. Deshmukh Memorial Seminar. This is the last item of the agenda. And I would like to start my vote of thanks with thanks to our respected director, Mr. Srinivasan, under whose leadership, under whose guidance this seminar has been held very successfully. He has also given the welcome address, and as usual, he has hit the nail on the head. He started with the protection gap that he was talking about. I think the overarching points, one of the overarching points here in this seminar has been the protection gap and how to address it. And similarly, the new customers, especially the young customers, how to leverage technology to reach out to customers. These are the main points which I brought to them. I'm very thankful to you, sir. On behalf of NIA and behalf of the team which conducted this seminar, I thank you once again.
Thank you.
Mr. Ganesh, IRDH, member, IRDA Life. He was dealing with what the regulator has done to facilitate the growth of life insurance industry, and especially during the COVID pandemic. And he also was emphasizing on the need to use technology to see that customer engagement is much better in the future. Of course, I would like to thank Mr. Ganesh for having spared his valuable time to address all of us. And I would like to thank our sponsors, the LIC of India, under whose aegis this seminar has been held so many years. Our chairperson, Mr. Kumar, we know all how much busy he is, but in spite of this, he has spared his valuable time to address us. And he has got out some points like millennial cohort is going to be a mega trend. And if that is the case, we have to address them. Digital literacy is required. Digital literacy does not matter, does not mean only a digital approach, but the age intermediaries are the staff working. Everybody has to be digitally literate. I think that was the main thing which was made. And newer distribution models, he has predicted that will emerge. And then underwriting will definitely has to evolve to address the needs of the customers, onboarding the customers very quickly. And one more thing he added was that, okay, fintech is coming, digital, everything is coming, but then the insurance companies may not have all the skills, or it may not be required also nowadays. And we have to form partnerships to see that the synergisty of life insurance skills and the fintech skills are realized for a better customer engagement and marketing. Value-added services, of course, he has been talking. On behalf of NIA and on behalf of this seminar team, I would like to thank the chairperson of LIC, Mr. Kumar, once again. Thank you. We were all talking about so many. I think all of you have the opinion that all the panel discussions were very lively, and again, some of the points which have come is about, again, the protection gap, post-pandemic, how it is. Hybrid model of working will always be there. That was also made a point. And one I was telling how to become a partner to the customer from moving to that type of paradigm. From now we are a player in the field. That I think is going to be very challenging, but do digital things, which I think we'll be able to do it. Again, one important thing was also brought up by one panel, and that was about bridging the trust deficit. You know, life insurance thrives on trust. The sponsors, our LIC, thrives on trust because, and this brand value is also built on trust. So life insurance as such, if it has to be trustworthy, then how it has to behave, that was also discussed, especially with the claim settlement. Now, final panel, an interesting point was raised. That is about what is happening as a silent revolution, maybe in entirely different kind of domain like IFRS, how it can impact the insurance market, especially the life insurance market, group insurance market was told. So if in the coming decade, if you have to design models, that means we have to be aware of all the other things which are impacting from the environment on the life insurance industry. That was, I think, the main thing was, again, it was protection, micro insurance and group insurance, which were again and again stressed upon. And they were pointing out around 66% of the business is now group insurance. That means very clear the models which are emerging has to account for this. On behalf of NIA and on behalf of the seminar team, I would like to thank each one of the panel moderators and their members for made these discussions very lively and interesting. Friends, I would like now start to thanking the compeers who Dr. Shalini and Ruchika Yadav, who have been actually even now she is smiling. You know, it's very difficult to smile the entire day, and here they have been very what do you call lively. I can say again, and I use the word. Thank you very much, madams, for this excellent comparing. And IT coordination, it has been a very smooth affair today, I found. IT coordination team led by Amol and seminar coordinator Parth Samal, our faculty life, and his team, of course, ably led by my colleague, Chair Professor P. Venugopal. Members of the various committees deserve our thanks again for the smooth conduct. And I would also place my appreciation and thanks for the members of the media who attended this seminar, who want to give wide coverage in the media. I am very sure that will also happen. And all the participants who have been, without them, without the audience, this seminar cannot be a success. And they have been, I think, participating with a lot of eagerness, a lot of takeaways would have been there for them, I'm very sure. And my dear friends, and we have been talking about reimagining our future for the decade. Why are we reimagining the models or bringing models? To harvest opportunities which are going to arise and which are already arising. So at this moment, I think it is appropriate to wish each one of you on the harvest festivals which are coming here, Lori, Pongal, and Makar Sankranti. Thank you very much once again. Goodbye.
Thank you.
Thank you so much. Ladies and gentlemen, with this we come to the end of the event. We hope to see you again in the next event. Please follow NIA's social media accounts and you will be updated. Thanks a lot.
Thank you. All the best.